So I weave reality into a frequency, preparing to ascend, spinning around inside this odyssey. I can't rewind, but time is a friend.
Hello guys, can say hi here.
The eye of the needle. I have sewn back together these scars. Still I'm bursting at the seams. Could I escape and travel far and fade away?
Good afternoon, everyone, and welcome aboard Stablecoin Odyssey, navigating the river value. Thank you all for coming, join us here in Hong Kong. It's great to see the builders, investors, and operators and researchers from across the stablecoin ecosystem gathering in one place. Before we begin, let me briefly introduce myself. I'm Yuki, entrepreneur with 11 years of continuous startup experience. I'm currently building in Web3, and I'm also the founder of Stable Hunter. Today, I will be moderating the sessions and helping connect perspective across infrastructure, payments, and the real-world adoption, keeping the conversation grounded in what is actually happening. Next. And I'd like to introduce the organizers behind today's event. This event is co-organized by Mastering Stablecoin and Stable Hunter. Mastering Stablecoin is a research-driven media platform focused on the stablecoin vertical, producing deep dive interviews, long-term analysis, and industry playbooks through podcasts, articles, and newsletters. To make this more personal, I'd like to invite the founder of Mastering Stablecoin to come up and say a few words. Let's welcome Kayla.
Hello. Hey everyone, I'm Kayla. Thanks for being here. I'm one of the organizers today and also the co-founder of Mastering Stablecoin. So last year when I was researching stablecoin, I found something interesting that this industry doesn't really have a concept of a value chain. And we rarely have systematic conversations together. So this is what we do today. Trying to map the ecosystem landscape into upstream, midstream, and downstream, trying to connect the dots. And we don't want to do a massive conference today. We just want to gather people who are actually building here and sitting down talking about the problem that we're solving. And me personally, I am a stablecoin yield product researcher. And I run a podcast. I do deep dive interviews and just trying to run a channel that cuts through the market noise and just talks about facts. So basically what I do every day, I'm trying to figure out where money comes from and what the risks are. And so if you are building in the space and whether you speak Chinese or English, we'd happy to chat. We'd love to chat. And this is my ask. Feel free to connect. And today, I hope you will engage, you will ask questions, you will do connections rather than just listen. And I'll also be doing some guerrilla interview around the venue today. But nothing formal, just 2 or 3 questions, trying to capture your most honest take on the industry at the moment. So if I come up to you, please don't run. And thanks for being here, everyone. I'll see you on the floor.
Okay, thank you for your effort, Kayla. And we'd also like to thank our sponsors for making today possible. Our title sponsor is Interlace, which is building compliant global financial infrastructure, connecting stablecoin with real-world payments and treasury operations. We also supported by our sponsors by Bitget Wallet, Virgo Pay, AWS, AEON, Asseto, OPCAT Layer, and Broad Cloud. Together, they present different layers of stablecoin and the crypto stack, from wallets and payments to cloud infrastructure, on-chain executions, security, and asset assurance. Today is not about announcement, launches, or hype. It's about asking a harder question. Where is the real value actually flowing in the stablecoin ecosystem, and where is it not? Over the next few hours, we will move along this river of value together, from infrastructure to insurance to the real-world adoption, and finally to yield and risk. Over the next hours, we will have full panels and 2 keynote sessions. We will start with infrastructure, then move to the insurance and RWA, followed by the real-world stablecoin adoption, and finally, yield and risk in DeFi and CDeFi. Along the way, we will also hear 2 keynotes to help us pause, recalibrate, and connect the dots across the day. When you check in, many of you marked on your positions in a map, stablecoin stack, upstream, midstream, and downstreams. That is intentional. Stablecoin only work as an ecosystem where there's layers connect and understand. So let's begin where everything starts, infrastructure. Our first panel explores how payments blockchains are evolving, not just for people and business, but increasingly for AI agents. Let's welcome our first panelist, and welcome our host, Coco.
Thank you. Thank you, Yuki. Okay, guys, I know you guys are really eager to do some socials, but if you want to have a conversation, please move outside and give more of quiet space for our panelists today. Thank you very much. All right, so everyone, hello, good afternoon. I'm Coco from the blog, and I'm very honored to be here today, and I want to introduce my guest. Do you want to come to stage? We're just waiting for Eddie to come.
Eddie here.
Okay. Yeah, please grab a seat. Okay, so today we're going to talk about payments, right, and also settlement. So within the last 50 years, the traditional banks has been using what we call the legacy rails, right, using 3 layers of payments and settlement and custody on messaging, clearing, and the settlement. But now we're really at the new era of payments, and we're doing a lot of things about stablecoin. And we require something called automatic settlement, right? And everything has to be instant. It has to be 24/7. This is what the blockchain has brought to the traditional finance. And I believe right now everybody's seeing more institutional clients coming into the industry, right? And I feel there's so much institutional players right now, and the things has been gone to so hard and so high standard as ever, right? It seems like decentralization has been realized in a very centralized manner somehow. But yeah, so I'm very eager to hear more about what you do, your layers, your products, and then the things that you're passionate about stablecoins and payments. And also we'll be touching about a little bit on AI as well. But before everything, I want everyone to say hi to today's audience, right? It's an afternoon, so make sure that you say something exciting. We'll start from Brian.
Sure. Thanks for having me today. I'm excited to have this conversation. I would start off, my name is Brian Mailer. I'm the CEO of Stable. Stable is a layer 1 blockchain that's focused on making payments effective and efficient and cost-friendly. With that, I think right now, a lot of people here have invested in a cryptocurrency, but don't necessarily use it on a daily basis. That's usually a combination of fees or complexity, and really what happens when you're trying to use crypto for real use cases, there's a lot of asterisks, and the more you start using it, the more those asterisks get revealed, where you have to have a second gas token, you have to have a certain wallet, you have to be on a certain chain, and all those things make it not really attractive or not really something that people are migrating towards. So as stablecoins became what a lot call the killer app for blockchain, there's still a lot of complications on the network or on the usage that our team at Stable is looking to solve and remove some of those to make it the actual product that people hope it to be. So excited for today, and thank you again.
Thank you, Brian. I have Natalie.
Thanks. Hey everyone, my name is Nelly. I lead payments BD at Monet. So I joined Monet by way of Portal, which is a stablecoin wallet as a service startup, which Monet acquired in August of last year. And then prior to that, I was at Revolut in New York. So Monet is a layer 1 chain that uses parallel execution and async input-output to achieve 10,000 TPS sub-seconds finality and also sub-cent fees. Very similarly, we're very focused on payments as a killer use case. And yeah, I'm happy to chat a lot more about the AI agentic payments work that we're currently working on at Monet.
Great, welcome. Hi, Matt.
Thank you. Thanks so much for having me. This is Matt. It's okay. I've been in crypto since 2013. Started off as a Bitcoin miner with custom-built ASIC machines. And later co-founded a company called Bitcoinist, which is a media, and then moved on to Bitcoin.com along with Roger Ver. And then really just got myself into the rabbit hole of building Telegram trading bots with Altcoinist, and currently working on Opcat Labs. It is a very, very interesting project because for anyone who's been around when Bitcoin started, they all know that Satoshi put quite a few things into the Bitcoin protocol code, along with the big blocks. But he actually put these 10 lines of code, which is called Opcat, which, believe it or not, makes Bitcoin programmable, just as programmable that Ethereum is today. And so we are building Opcat. It's a layer 2 infrastructure for Bitcoin, with the aspiration that, and of course, lobbying for the Bitcoin core developers and for the industry, along with the miners and the node operators, to accept this Bitcoin implementation protocol of Opcat. And very happy to work on this project because I believe that Bitcoin is an asset class that's a multi-trillion dollar and is just sitting there idle. So we would want to make it more useful. Thank you.
Hi everyone, so my name's Eddie. Meet another OG, I guess. I joined a little bit later. I joined crypto around 2017-ish, before I was Bancor. And then I realized that things are changing, things are moving. And I still remember that the first day that I see the white paper of Bitcoin, right? So it's a literally peer-to-peer payment system. But look at now, right? So I don't think crypto payment is at that stage of adoption yet as Satoshi's vision. And that's why we created AEON. What we are is a settlement layer. We're a middleware that connects crypto liquidity from all the stablecoins and then to the real merchant use cases. I mean, like literally buying coffee, buying pizzas, or booking airplane ticket, all that sort of things. We are probably the largest real-life merchant settlement layer these days. We work with OKX, Bybit, Bitget, all the exchange, you name it, right? So we handle probably 80% of all the QR code payment these days for them. Before I created this project, I was at Binance, Fiat, and I was working for Chainlink at the capital market related initiatives as well. That's how I explore that there's a lot of opportunity these days. I'm happy to be invited here and then to talk about crypto payment and also, I guess, agentic commerce, which is the next thing.
Yeah, I'm very excited because today we really have a great panelist to be here and tell us all the really forefronts of information of payments, and they deal with those things every single day, right? And right now, actually, we're into this like AI stage, right? Of like everything is so agentic, right? Like open clouds, like multiple, they change it every day, their names, right? It used to be like cloud bolts, right? And they just constantly change them. Now confused like what they're called actually. But for now, we're moving to this agentic economy. What is like the biggest like challenge you think when you're like building your work and thinking about this as a background of an AI agentic economy? What is the biggest challenge that you face when you're building this infrastructure? Anyone want to answer this?
Sure. So is everyone here familiar with X402? So just to recap, like X402 was the recent open payment protocol that was released by Coinbase. It's an HTTP native way of sending payments on the internet. So instead of getting like a 404 error on your website, you might get like 402 payment required. And then there's a whole just HTTP native way of essentially settling payments on chain after that request, after that is shown. And so I think one of the biggest challenges right now is that with agentic payments, it really unlocks payments at the rate of data. So currently in our global economy, APIs consume maybe like trillions of requests per second. If you look at traditional payments today, Visa processes in real time up to like 4,000 payments per second at its peak, and on average about 2,000 payments per second. Banks obviously a lot lower than that in the US, ACH notoriously takes like 2 days to settle. And so with agentic payments, you now have a good problem where you're essentially solving for agents to send requests across the internet at the rate of potentially like thousands or even millions per second. And so systems need to be changed in order to meet that performance throughput. And so we have, like layer 1 blockchains like Monet or even payment-focused blockchains that are now solving for this issue, whereby we want to solve for high throughput, low latency, and low fees. And at the same time, we also want to foster an ecosystem whereby developers can actually develop agents with the support that they need. So Monet launched a AI agent hackathon over the weekend in Shenzhen, where we encourage people to create agents, anything between human to AI interaction and AI to AI interaction. And so I think building the ecosystem and obviously the infra is actually extremely important to meet the new problems that AI agentic payments create today.
Yeah. Do you want to?
Yeah, thank you, Nelly. So I believe what you guys are doing, and eventually what many of the people who are working in this industry are doing, is extremely important. So I always like to dumb it down a little bit for for the people, because when I started in crypto, and as a matter of fact, I still believe that most of the people don't even understand like how this thing works, right? Just like how people don't understand how their credit card works, how banking system works, and as a matter of fact, like there's 4 billion people that are actually excluded from the banking system. And so people should actually not really know how these systems work, and they, as a matter of fact, they don't really care how this system works. I believe that our job as builders is to basically build the infrastructure so that the users are able to be a participant in that infrastructure, and they are able to use it, right? Just like you use it your credit card. You don't need to know how to use it. So I think the future is very bright, and it's still ahead of us. But we have to build the killer apps for these users to be able to use these these agents on the first hand, and then those agenting payments, right? But in a way that it is very safe for them, it's very secure for them, and also very easy for them. And so, many people here work towards that, and I find it, fascinating in terms of like the speed of the technology that's moving ahead.
Yeah, also thanks Nadia, I guess for bringing up Expo too, because as AEON, we're actually one of the launching partner with Coinbase developer platform for Expo 2. We support multiple chains, so probably we will also support Monad and Stables in the near future. Currently, we host the largest Expo 2 facilitator on BNB chain these days, and then now expanding to other chains. But anyway, I think the new trend of agentic commerce, when we talk about it, it's the whole I guess time frame is even bigger than what we'll talk about, because we work with real life merchants, right? So like the real merchants, and I feel like the biggest change is that people are changing from using an interface on the internet to agent. What that means is that if you order food, if you do something with the app or a web page, it's the Web 2 style. On the Web 3 style or on the agentic commerce, you only evolve with one thing, your agent, be it your persistent, your assistant, your whatsoever. And all the commercial activities will only evolve from that agent as the single touch point or the interface. So I think that's the most critical thing that's going to bring the changes to all the commercial world, I would say, in the agentic commerce sense. So that's why, as payment company, I think this is just a biggest opportunity of the history for the change. Yeah.
So you're not just only focused on the merchant, but also focusing on how people can use it on a day-to-day basis, and to kind of smooth out that process of payment, right?
Exactly. So if you look at it, people ask ChatGPT, ask Gemini, hey, how can I book a ticket, or how can I do something? You want to actually finish the task, right?
Definitely.
So the last mile has to be something commercial tied. You have to pay the service, you have to pay for the food, or that is something that payment has to facilitate. It's natural.
I feel like the one word has been frequently mentioned, where it's like killer app, right? And an application, those kind of things, you really have to make it user-friendly for people to use it on a daily basis. So I want to ask you, Brian, is there something that when you're building stable. Is there anything that you want to talk about what you did for kind of a scaling the business? And is there something that you give up or you think you want to change during the process from the traditional, just the technology of blockchain? Is there something you want to talk about there?
So to get a little more detailed into what Stable does is, as I mentioned, there's a lot of complications using blockchain. So one of the things that we did early on was we identified the volatile gas token that you usually pay your fees in. We removed that. So instead, your fees are denominated and paid in USDT, which obviously at 80% of the market of stable coins, it's relatively accessible on all the exchanges, and so you're able to get access to that token. So I would say we looked at the situation of, I'm sure everyone here at some point invested in crypto, and you probably had a hard wallet at some point or a non-custodial wallet. And there was an oddity where, let's say someone tried getting you into crypto and they would send you some USDT to kind of start you off. You had a bricked wallet effectively. You had to find a way to get, whether you're on mainnet Ethereum or another chain, you had to figure out how to get that token into your wallet to start using and send that money out, which obviously is one of those asterisks that I mentioned earlier. So what we did is if someone sends you 100 USDT, you can then turn around and send out 99.999 USDT, and the gas fees paid in the transfer. So that was a big difference that we made with stables, removing that need for another token that you had to watch the volatility. And I think we're all aware of what happened last week with the markets where, if a CFO is a company is trying to use USDT or USDC or PYUSD to make their payments, and the market goes down. So let's say they bought $1,000 of equivalent of Ethereum, price dropped in half. Their transfers that they need to make became twice as expensive. I would say anyone here who sits in a financial role knows that's not a really good pragmatic way of addressing your business. So again, for us, denominating in stablecoins allows you to not have that volatility. But going a little backwards in time, I would say, we keep mentioning the killer app. I would say the last time we saw this was in the early 90s with PayPal. And I can tell you that PayPal didn't have the same turnout at a conference for people to hear how PayPal worked. The difference now is that the incentives that PayPal had to play in terms of the traditional rails of fintech and payments weren't incentivizing the clients or weren't incentivizing the end users. And there was still a lot of obscurities or opacity in the market of how that works. Stablecoins allow individuals to have access to, let's say, DeFi or other financial tools that normally wouldn't be there. Because in order to use PayPal, you still had, as you were mentioning, had to be banked, and you had to have access to on-ramp, a credit card, which is expensive or may not be expensive in, let's say, a developed economy, but in a more developing economy where they weren't available, they weren't able to have access. So this is, I think, a very good way of leveling the playing field and allowing all individuals to have access to the same tools and mechanisms to make a transfer value.
Yeah, absolutely, absolutely. I agree with that. So that's something that we have talked about in terms of killer app applications. And now we're talking about more on the features of the infrastructure. And obviously, agentic economy requires a really fast speed of transaction. And right now, I think even the institutional clients, they are serving the people trading gold in 24/7 manner, right? And then so I think for blockchain people, for the Web3 people, we have to do something about it. And Mona is really famous for having fast transactions, right? Yeah, Mona has been doing great in terms of providing a really fast transaction for users on a lot of transactions with a parallel manner of recording all this messaging, right? For agentic economy, do you see anything you want to change in terms of those kind of fast payment, or is it fast enough?
Yeah, I can expand a little bit on what we're doing at Monet. So throughput is definitely a really big feature of Monet. As a tech, we definitely pride ourselves on that. But one of the things that, like Eddie mentioned, is the facilitator aspect of needing to settle and verify transactions on-chain when it comes to agentic payments. So Monet has launched its own facilitator over the weekend. You can check it out. It's x402-facilitator.monet.xyz. And this basically allows developers who are building agents or the agents themselves to use Monet to settle and verify transactions on-chain. And then the other thing that I mentioned was that we're also very intentional about building an ecosystem where developers can actually develop these agents with the support that they need. I think a favorite project that I heard over the weekend that came out of the hackathon was a project called Rent a Human, where robots can actually rent humans to do work for them, and you can check it out on Twitter. Extremely dystopian, but this is the kind of thing that's being enabled by agentic commerce today. Like, not only do you have humans paying other humans, but now you have like robots paying humans, robots paying other robots. Any AI LLM out there is like a client, right? So I think we're basically trying to facilitate all of that, not just with the tech, but also with, like native primitives, like being a facilitator, as well as providing ecosystem support to developers who actually want to build this.
Amazing. Keep it. Like, I think for the next one, you have talked about the fast part, right? Now let's talk about the slow part, the Bitcoin transactions. So obviously, Bitcoin transaction is more known for its safe, secure, but slow. Right? I've seen the time where, in the gas flow, just like millions of transactions just not getting through. But obviously, OPCAT, you're doing something about it, right? And what do you think about this? Like, for a slow transaction, is it good for agentic transactions, or is there anything that you want to talk about OPCAT?
Yeah, if you don't mind, just let me do a follow-up in regards to what Nelly has been talking about. So I find this fascinating in terms of that new website that you just said, and eventually I heard about that too. So, eventually, like, us as humans, we created AI and then created the agents, and then now the agents are creating a website for themselves to do things that they cannot do it physically. So before that website, I used to do this. I used to say this joke to all of my friends who have set up a Claudebot now called Moldbot or whatever. It has 5 names now already. But basically, I said, like, it's fantastic that you have this amazing assistant, but AI assistant. But can that assistant really go and pick up your dry cleaning from the laundry, right? And of course now we do have the answer, right? So the AI can actually hire a real human to pick up the laundry. So I definitely believe that we have just now finished the full circle when it comes to that. In regards to your next question, so I think it's going to be really interesting to see how these AI agents are actually going to choose which network and which blockchain they will want to work on, right? So how are they going to choose that? Is it basically based on the LLM, all the models and all the education they have received, or is it basically based on all the experience that they have seen? Are they going to really go for the speed of the transactions, or are they going to value the robustness and the security of the blockchain? I don't think that there is a clear answer to that at this point. I think the speed of the blockchain is super important, but also making sure that the blockchain is secure and safe enough is also very important. So I think this is yet to be seen.
Okay, so I actually want to follow up on what you just said. In terms of, when you're building the infrastructure, you have different purposes of building it, right? And you have priorities. Sometimes you focus on high speed, sometimes you focus on the killer app, right? What is the things that you think, when you're building the infrastructure, you guys, you would prioritize when you're building the infrastructure? What's the purpose? What's the main purpose?
Right. I can't say for all. I mean, like, we do payment for years and things, and
I'm working with a lot of partners, big ones as well.
There's a lot of segments of the space, right? So all I can say is for us, definitely verifiability or per se security, and is probably, I would say, the most important thing.
Security,
verifiability, because this is the assets you're moving, right? So like
security over speed.
In some case, I would say it's really case by case, right? So for example, if this is a institutional ramping, of course you want security over, like, they don't care if it's like take 10 seconds or an hour. But if you are saying consumer basis use cases, right? So for example, still, buying pizza, or like you just paying at a convenience store, you want it to be 2 seconds. That's something very different, right? So I think both parts, you just have to have it. But the real thing is how you weigh these factors in different scenarios. And then while building infrastructure, a payment infrastructure, on our end, we are having an internal weigh system on this thing. Basically, it's like, if we go in for high verifiability use cases, then of course, let's go for full nodes. Let's go for high transaction fees like settlement chains, and then Ethereum whatsoever, even Bitcoins, right? Sometimes, but like if you want to be more user-friendly, adaptive, making sure everyone can actually use it, sometimes you probably even have to rely on a semi-decentralized way to do it, right? That's the nature of payment business. So yeah, in short, I would just say you just have to balance both, and then you need to have a way system inside of a matured payment infrastructure.
Absolutely. Brian, you want to talk about it as well?
I would say like the overlap you have to take when you're looking at speed and security, and it's also the accessibility. A good example is like in trying to look at like modern day payments. The adoption to tap to pay is the fastest adoption of a new form of payment that's happened in the past 50 years. It became a frustration. No one wanted to have change. No one wanted to make change. No one wanted to have to do that record keeping. And so you've seen banks such as JP Morgan adopt or develop their own JPM coin, where while it's extremely centralized, that's the access. So they're able to limit the access. But they understand the speed and security when they need to reduce their overhead cost, improve their auditability. And a lot of what Nelly was talking about in terms of 402, you have Google who rolled out AP2, which is their way of doing authentication, authorization, and authenticity, where they're able to have the same agentic payment model that's been put out. And what that does is allow it becomes something in the back of your mind. I think you guys were talking about earlier where you don't need to have payments be front and center. No one necessarily cares about payments. No one knows how the Visa network works or what the Chase payment tech in the US does. It's rather, everyone wants it done and fast. So when you walk in the store, you want to be able to tap to pay and walk out and you have that confirmation. But the problem there is that they're sacrificing security for speed. And I think that's when you have the ability, because you can still defraud. You can pull someone's numbers off the front of the card and you can still replicate it. So credit cards haven't solved the security aspect of it, but when you're able to use something like a blockchain and have like even as basic as a Face ID where you can authenticate and you can't have the authorization, that's where you're able to actually secure a network and have the same speed and security. And so I think there's definitely going to be a shift into that market, and you've seen players, as I mentioned, the JPM, where they have it internally. It's now, how does it become a more decentralized or more accessible product in time?
Yeah, because they are big, right? They have their clients and they can do whatever they want. And also, I think they're doing great because they kind of also fit in the legal regime as well in a very fast manner. So I think that's great of what they're doing, and also advancing the tradition of how we used to do it, and they kind of innovate on a new coin, right? That's innovative. That's great. Okay, so now I'm actually going to ask a question for you guys. Has anyone tried those what are called the Cloud Bolt or the Mold Bot in the audience? You have. Who else? You have there. Have they been deleting files on your laptop? No. So I think one of the things that we experience is security issues on those bots, right? That they do things without your permission. And obviously, if they're deleting your X pictures, that's fine. But if they're like paying on your laptop or on your phone or your crypto wallet, that's not fine, right? That's kind of irresponsible. So what are you thinking on this? You think that, the agentic payments with those bots and then without any permission and they can pay. Is there anything I want to touch on this point?
Just real quickly, I would say, looking at the AP2 model, I think people imagine it where you just give access to your entire bank account or your entire wallet. It's really going to be that you're going to be setting up like kind of micro wallets or micro authentications where you basically have the approval. So I think the safety there is like you can allocate that like these payments are only eligible. I think you mentioned food earlier. So you can say like you can do food transactions up to 100 and I don't need to look at it. It's a little bit like everyone's payment systems or accounting systems at their office for expenses. You're able to like book certain things without a receipt. That's effectively, I think, how you can kind of conceptualize this with agentic payments is that you're going to give pre-authorizations for certain amounts and certain destinations or certain vendors or certain times. And that allows you to kind of not worry that your entire wallet's going to be drained. But again, it's user error. If you set it up without that, then that's your responsibility.
Because the friends give me the advice, you should always use a previous laptop, right? Don't use your current one or don't use the current one with the full permission to your wallet whatsoever. But I think it's just not for individual user, but in terms of like, a massive client space, right? Even like big institutional clients, when they go to custodies and settlements, they also kind of talk about risk, right? And what if something happened? They always use third parties infrastructure. And if something happened, who's going to be responsible for it? And then obviously for you guys doing payments, you'll be dealing with, I don't know, like third parties to work with as well, right? And if, let's say, In the worst scenario, the agent paid, and then the user wasn't aware of what happened. It could be a client, it could be an exchange, right? Who should be responsible for it? Have you guys talked about who should be the risk ownership of these issues? Sorry, I'm asking you the hard questions here. It's like, worst scenario, what's it gonna do?
Yeah, I mean, I'm not sure if you can give you like a 100% straight answer to that, but you know, I think it's again like another situation where technology is a lot more way advanced in terms of the regulations and in terms of like all the guardrails. So. You know, getting back to your point about, you know, the wallets being used in terms of like, okay, I'm going to set up a main wallet, and within the main wallet I will have like a sub wallet where I just say, okay, this is for all my travel expenses. Because how nice it would be that if I could just, you know, tell you know, my digital assistant to book me a flight, you know, from Hong Kong back to Dubai, and then, you know, that agent is only being able to spend the money that's you know, on that allocated account. Now, what happens if the agent figures out a way to get out of that account,
exactly.
right, and then use the main funds, and just decides to you know, book me you know, a first class ticket versus a business class, or even book a jet, right? I mean, that's a great question. I think at the end of the day, like whoever, and that's actually part of the reason that I still have not set up the Moldbot, right? Because I'm kind of a little bit terrified about that, because, you know, at the end of the day, you have to have the right guardrails in regards to setting it up. And so, do you think of every single instance that, you know, the bot can make? Like, let me just give you an example. You said don't set it up on your computer, right? I agree, right? But it shouldn't be that everyone goes and buys a Mac Mini. As a matter of fact, most of the Mac Minis have been sold out.
Yeah, I know.
Right? But then they say, okay, just, you know, create a sandbox environment on DigitalOcean. Okay, but what happens if the bot figures out and finds another free hosting provider and just, you know, copies itself? Right? So just recently I went to this conference, Satoshi Roundtable, and I was talking with a gentleman. He said, I just set it up before the conference and I literally unplugged my Mac Mini from the power, right? But again, this gives you the question, have you given the prompt, the guardrail for that agent not to move from that actual machine? Yeah. I mean, we don't know. And I think that's like the lines of guardrails and the lines of the security that you need to add to these things. I think it's like so many that we cannot even think of.
So to play devil's advocate real quickly and to maybe bring the audience back into it, I would say who here has had credit card or bank fraud? Probably everyone. And what's the wildest thing that was charged to your credit card? I mean, there's usually flights or hotel or like an online subscription. I can happy share, I have a bank account here. I was the largest purchaser of, when I got a credit card hack, was the largest purchaser of baby formula. And with that, it was over and over again. And the transactions that went on were within microseconds. Like trying to deal with Neat, the credit card provider here, there was no fraud detection. They said that there was an OTP sent, it was ignored, and they did it within the same window, and all these things. So when we're talking about authentication or authorization in order to use these agentic payments, we're always worried about like how secure we can make it, but in reality, we exist in a world right now that doesn't have that security and doesn't have that framework in place. So we're very worried about like the bot booking the jet, but I ended up purchasing a lot of baby formula to the point that I had to fill out, like, I had to go to the police office, fill out that I wasn't the importer of it. But I would say that we worry about all these bad things, but we already exist with some pretty bad guardrails in place, or lack of guardrails right now.
Yeah, speaking of these things, right? So I think the most important thing is like all of you should talk about it, definitely 100% agree, right? So, but I think the most important thing is leaving the trails, because we don't know what's going to be the real guardrail solution will be at this point. But AI agent keep, you know, progressing, right? So there's a lot of applications. I think really at this stage is how do we demonstrate the rails, like the you know, like whose fault is it? If you look at the agent case, payment use cases, it could be the agent be hacked. It could be the user get hacked or unauthorized. It could be the merchant who's already a fraud merchant and then getting all these payments differently. Or it could be the settlement network that's going down, that settlement doesn't going right, right? So all these things, you just have to put the blame right correctly. I think that's the most important infrastructure question for the industry, right? So you can't stop the innovation, it will just innovate, and then there's going to be a lot of error cases or fraud cases. Yeah, figure out, but just figure out whose fault is that, and then put that blame. I think this is the same thing with Visa and Master these days, right? If things goes wrong, Visa or Master doesn't really pay, but like they figure whose wrong is it. Is it the merchant? Is it the user? Or is it the, the chargeback checkout, right? So it's really depending on this thing, right? Yeah.
I think today's word discussion is very much focused on AI agents, right? And obviously that makes us to think about who can serve the agents the best, because I think it's definitely a growing trend of people using AI agent. Matt, would you agree?
Oh yeah, I mean,
because you look scared using agents.
I mean, not like on a giant scale numbers, right?
Yeah.
Like if you think about it, like it's interesting, right? If you're interested in that kind of stuff, like your X algorithm is only going to show that. And by the way, like my X algorithm kind of like saved me from the current crypto bear market, because it doesn't now show me all the bad stuff happening around crypto, but just shows me like all the great stuff happening around AI. So, but again, it's just like a small number of people compared to the rest of the world that are actually using it.
And do you think if agents can ever choose a settlement layer, do you think they will use Bitcoin?
I mean, I hope so, right? but again, like I think it's not necessarily a competition. I think they're going to use multiple blockchains.
Okay, multiple. Okay, that sounds complex. Natalie, what do you think? Or EVM maybe, not necessarily half Bitcoin.
Yeah, I think the jury is definitely still out on that one. I think one interesting point I just wanted to make on the risk aspect of AI agents is that I think in our permissionless system today, whenever a person uses a self-custodial wallet, the risk falls on the user, right? And so I think we probably will see like a little bit of a similar model with agentic payments, whereby the risk will initially be assumed by the person using the agent, because we're like intentionally disintermediating the payment supply chain, where like you're not relying on a JP Morgan or a Visa or a MasterCard anymore. However, you as the user, whether it be like a retail person or a developer using the agent, you're essentially responsible now for the whole payment flow. So I think the jury's still out on risk. It will be very interesting if agents can like eventually be held legally liable for messing up at some point. But then, yeah, like I think that's the slippery slope.
Yeah, I think my question would be like, if the agent can choose, would they choose your layer?
Based on performance
this is a question not just for me, it's for all of you guys. Okay, yes, for all of you guys. Would they choose your layer or your product? Or, yeah. And why?
I'd say, yeah, like I think it really depends, but I'd say yes, given, I think if some of the parameters were performance and obviously like network effects, then I'd say yes, but who knows?
Yeah, it is a lot of things I'm excited to. Yeah, what do you think? Addy, do you think they will use your payments? Will you support them?
Yeah, well, first of all, we're omni-chain, so whoever got adopted, we'll integrate it and make it to the case, right? We just support those AI agents. That's what we hope for. So, yeah.
Yeah, I mean, to be honest, I think there's a lot of question marks still today, right? Because it seems that every single day, like the next day, there will be like new AI stuff, right? And next day, the AI already hiring humans rather than we use AI nowadays. So who knows? And so let's just put all beside. So my last question to wrap today's panel up is, to put this aside, what do you think is the most fundamental value that you guys have for your product, your layer? What is the one thing, or it doesn't have to be one thing, so it's like, what is the most fundamental value that you provide to the society, I mean, or to the payment, or today's transactions and economy? Give it a bit of thought.
I think like from eventually like we're building on Bitcoin Bitcoin layer 2, right? So from our perspective, eventually we want to see these AI agents to use the network, right?
You do want to see that happening.
I do want to see that happening, but I also believe that, and getting back and just to give you a follow-up on that question, right? Would I prompt my AI agent not to use any algorithmic stablecoins? Yeah, I would, probably, right? Would I instruct the AI agent not to use a certain, blockchain that maybe I don't like? And of course, we're talking about like very skilled prompts here, not everyone is going to do. But I think at some point there's going to be a lot of these AI agents that already have these settings built into it, and then you can just basically choose whichever blockchain you're feeling comfortable with for your agent to act upon, right? And so I think this is the direction that these agents are going to go, and our job as a layer 2 is to build a very good layer for these agents to be able to transact on.
Nice.
Thank you. I think I'll just summarize it in three points. So I think one, obviously for performance, Monet enables fast performance today, both from a TPS, latency, and low fees standpoint. The second point, as I mentioned, is that we're already at the forefront of developing these native primitives on our chain. So we launched a facilitator native to X402. We are launching a lot of ecosystem and developer support with hackathons, with go-to-market support. So we're really at the forefront of helping developers. And I think the third point is just around, sorry, I was going to say, yeah, sorry. I think those just the two main points.
Yeah, amazing. Brian?
Sure. I would say in terms of like using our chain, obviously there's a vested interest in building it and getting it launched, that we'd love to have everyone and all products using the chain. But in reality, infrastructure is not sexy. It's not the product that people are thinking about when they're using it. Just like we mentioned, no one knows how the Visa network works. No one knows where the money's going on SWIFT. People really want the end results. They want the money where it is. They want it secure, and they want it done with let's say, an objective fee or understanding what those fees look like. And we believe at Stable, like, we provided all those things. It's fast, it's inexpensive, and it's secure. So what we hope is that if you're using an agentic model, that model's trained to do just those things: speed, security, and also efficiency with cost. And if the models are looking at the spectrum, you technically wouldn't want to train your model to then have to not look at what's the best rather than to use a preference. So we would actually say that we hope it's used, and that would be based on performance and block production and also transaction time. So similar to Monad, we have like a sub-second finality. We have thousands of transactions per second. But in reality, agentic model, as much as people have started using them, don't care about what we emotionally care about. Rather, they want the performance and they want to execute their task. So we would say, yes, in terms of agentic and individual users, we hope we see the migration there. And we've already started to see that happen since launching in December.
Fascinating, fascinating. Yeah.
Yeah, for AEON as omni-chain middleware for agentic commerce, really we want to solve the silo problem in the triangle we talk about. So on one end you have crypto, you have AI agents, and you have real live use cases. Each of them currently kind of have their own ecosystem for commercial activities, their own characteristics. Really, we want to solve this by providing an interoperable liquidity between each other. So AI agents can reach to real life merchant and then using crypto as payment result, right? So we think that all these things connect together. And our product luckily have a lot of these features and progressing that. Currently we have over 40 million merchants that's supporting all these connected liquidity, and then we're hoping this become the fundamental for the futuristic agentic commerce.
Thank you so much, guys, for your contribution in the payment area and for a lot of work, amazing work that you have done. And I'm sure everybody now know more about their projects, about Stable, Monad, OPCAT, ION, and they will be around for a little bit. And if you want to talk to them, I'm sure they're happy to talk to you guys a little bit. Thank you so much, guys, again.
Okay, thank you to our panelists. Before we move into the next discussion on RWA, this is a good moment to pause and recalibrate. We've talked about payment rails and infrastructure choices. But the big question is where do Stablecoin actually create value in the real world, beyond these rails themselves? And let's welcome our heavyweight VIP guest, Dr. Kong Jianping. Welcome.
Okay, thank you. 我这个英语不太好，我就用中文讲了啊。很高兴参加今天的活动。今天反正只有15分钟啊，我就交流一下我对 Web3 的一些简单的观点。那我觉得 Web3 呢，这10几年的发展呢，我们其实已经经历了2个阶段。一个阶段是以比特币为主导的这个区块链的一个启蒙时代。我记得这个会场呢也做过过去几年也做过很多比特币的生态的活动。那第2个阶段呢，就是我们是一个以以太坊为主导的一个区块链的一个金融应用时代，所以我们诞生了很多 DeFi 项目，所以这过程中也有 DeFi， 也有 DAO， 也有 NFT 等等这个火热的各种各样的生态和新的玩法。那我觉得我们现在正处于一个第3个阶段，就是一个合规融合的阶段，所以我们看到了 ETF， 看到了这个合规稳定币的这些进一步的发展壮大，以及 RWA 这些的一些市场的一些诞生。那我觉得未来还有一个阶段，就是跟传统产业结合的一个阶段。那过去几年呢，火的热点非常非常的多。那其实最近1年，我把最火的几个热点就列在这个PPT 上面了。那像这个预测市场，像比特币，像 RWA， 像这个币股 DAT 是吧？像那个美股代币化，以及这个AI 支付协议，这些都是非常热门的话题。当然，今天大家重点讨论的是稳定币，所以其实真正第一个稳定币就是全球最大的 RWA。就是我们的稳定币。那其实从 Circle 上市开始到这个泰达成为全球第18大的美债持有人，都是表明了稳定币是非常非常火的一个赛道。那我们看到稳定币的交易量也超过了 Visa 跟 Master， 还有像那个，同时呢还有美国也通过了这个稳定币的法案，以及我们香港现在也是今年3月份也会批第一批稳定币的一个持牌的一个机构。那香港我们财政司司长也说了，这个香港除了做这个港元稳定币以外，也可以做其他法币的稳定币。当然，其他法币稳定币肯定需要遵守其他的国家的对应的稳定币的一个法案。那我们看到前段时间的稳定币也比较火，所以香港也是有金管局局长也有出来降温啊。这个核心是要这个不能空谈理想，要有这个稳定币的应用场景啊，然后这个也不能盲目做一些跟主业无关的这些。这是香港对于稳定币的政策相对来说是积极稳中有进啊。所以。很多人关心这个稳定币是不是美元的霸权啊？那我们觉得，真正的稳定币起来，其实是因为中国的监管。原来中国的华人的交易所都是用人民币充值买数字货币的，但是呢，中国一些文件发出来以后呢，大家不能用人民币去买比特币了，那这时候美元稳定币就起到了作用，所以就第一波美元稳定币就可以爆发。所以整个稳定币其实是分为3大场景啊，第一个就交易的场景，交易的场景就各种原生交易所原来是不被法币世界满足的。那第2大场景就是以太坊起来以后 DeFi 场景，那这时候DeFi 生态内引入了稳定币，整个稳定币发展到了1000多亿美金。那第3个就是不被传统这个金融满足的支付的领域。啊，包括我们之前所说的黄赌毒的领域，包括现在各种跨境支付以及未来的 AI 支付领域，我觉得都是不被传统金融满足的，所以这都是稳定币巨大想象空间的场景。那本质上稳定币需要符合这3点才能做好，就一个是降低金融成本，第2个是这个提升金融效率，那第3个就是要有财富效应。我们看到很多人换了稳定币以后，不愿意再换回法币，就因为稳定币世界创造收益的这个可能性也更大。那长期我个人是比较看好美元稳定币跟人民币稳定币，但人民币稳定币现在还没有啊，这个目前还不存在。对，所以像美国特别支持稳定币，我觉得它主要其实就解决美债问题啊，同时这个维持了美元霸权以及确保金融创新在美国的发生。 那我这里做了个对比啊，就 OpenAI 跟泰达这两家公司，一家是 Web3 稳定币公司，一家是 AI 公司。那我们看到这两家公司的市值都是5000亿美金，但是人员上的话，这个区块链上的稳定币公司只有100多个人啊，一年有100多亿美金的利润，所以它在区块链上创业效率更高。当然，这不否认 OpenAI 是家非常伟大的公司，我只是简单做一个对比啊。那剩下的 RWA 我就不讲了啊。那最后讲讲香港啊，这个香港其实现在已经从2011年开始说这个政策宣言，欢迎大家来香港这个做 Web3，以后这几年发展下来，香港已经超过新加坡，成为这个亚洲的 Web3的金融中心。那现在有香港这个有这么多的立法跟制度跟推进啊，所以我们看到这个。现在也已经有11家交易所取得了这个香港的这个牌照，同时呢，像 Consensus 这样的会议，今年也有每年也有好几个，啊，那最后呢，再给大家介绍一下香港数码港，因为香港数码港是这个香港政府100%持有支持香港 Web3发展的桥头堡。目前呢，我们有2000多家公司入驻，啊，其中有300多家是这个Web3公司，有几百家 AI 公司，也建立了我们投入了几十个亿，建立了全香港最大的 AI 数据中心。所以大家如果要做稳定币创业及 Web3创业的，都可以申请入驻数码港。我们这个政府这边有很多这个基金的支持啊，谢谢大家。
对，孔老师请留步，对吧？今天我们非常荣幸的可以请到孔博士，所以的话就是我们也给现场的观众2、3个可以提问的机会，对吧？大家有没有什么想要问我们孔博士的 ？OK。
3月份出的稳定币的是规则还是方向还是划定的？
啊，3月份会有第一批牌照出来，就哪些公司拿到这个香港的稳定币牌照？对，规则之前已经公布了。
大家可以稍微安静一下，然后如果大家需要搜索的话，可以到我们的展台区进行交流。对，然后还有没有哪些那个观众想要提问的？对，这个机会也比较难得，有没有？
孔老师对于人民币的稳定币有什么展望？
人民币的稳定币轮不到我展望啊。对，所以目前来看，短时间应该还不太会有，但长期来看，我觉得肯定也得符合这个技术、金融科技发展的趋势。
OK， 还有哪个人想提问？
如果稳定币的底层全部是债券的收益的话，像 Circle、USDT 这种，值多少钱呢？怎么给它估值？
我个人觉得，就是说，用现在的估值模型去算这些稳定币公司的估值，你可能会错过整个行业的这个成长的一个机会，因为这些公司都属于新的物种。啊，如果只用债券的收益去测算它的利润，把它当做一家普通的金融公司，这个事情肯定不一定合理。因为长期来看，这些稳定币肯定是有更强的网络效应的，它更多的像一个科技公司。啊，所以说随着它稳定币的发行量的增加，它产生的网络效应会更大。所以这个时候它产生的一个爆发力跟影响力可能会更大吧，我觉得。
其实我也有个问题想要问孔博士，对吧？就是最近其实又出了一波的政策，包括 RWA 的一些新的规则，对吧？你怎么看待最近新的出的这些政策？能不能给我们做一些科普和解读？
我觉得中国出这些政策非常好啊，为什么呢？就是为什么？你去看中国原来在互联网时代都是超海外的，是吧？到移动互联网时代跟海外齐头并进，到这个区块链时代，很多中国项目超过了海外项目，像挖矿、矿机芯片、矿池交易所，其实在全球都是引领的。为什么呢？就因为中国一直出政策，那就加速了这些创业项目的国际化。所以我觉得中国把这个政策明确，其实对于创业者是好事情。那大家可以更加聚焦的这个海外市场去创业，这第一个。第二个呢，中国大陆的政策现在目前没有完全禁止 RWA， 给 RWA 其实是开了口子，那未来可以通过证监会或者其他部门的这个备案来发行 RWA， 当然这个难度会非常大，但并不是没有可能。对。
刚刚孔博士提到，就是今年从无论是 DAT 也好，包括 B 股也好，包括可能像 U 卡之类，其实都有很多机会嘛。那整个26年去年我的感觉可能是那个 DAT 好像是比较火的但整个26年，可能你觉得就是哪个就是细分的领域，你觉得你最看好？
我觉得现在 DAT 已经狗都不理了吧？这个，我觉得2026年可能这个2个赛道还是会比稳定币肯定是个持续的赛道，比特币也是个持续的赛道。然后另外我觉得预测市场肯定会进一步爆发。然后这个这种 RWA 的这些就是合约。可能会进一步的爆发，因为原来这一类是没有的资产，最近1-2个月才开始交易所有上线，所以我觉得这2块可能是爆发最快，因为这2块受到传统世界的影响最大，那剩下的可能才是 RWA 的现货RWA 的其他的这些资产吧，我觉得。
OK， 我们还有最后一个问题，还有谁想要问孔博士一些问题吗？最后一个问题 ，OK。
想问一下孔博士对于这个稳定币合规的走向和趋势有什么看法？
我觉得稳定币肯定因为会覆盖越来越多的人群，所以合规也是一个必然趋势吧。但是因为合规其实越合规的事情越不适合创业团队干。那可能创业团队可能更适合做原生市场结合的这些稳定币或者相关的应用，合规可能适合更有实力的团队去干相关的这些稳定币。但长期来看，因为你要覆盖传统政府管辖的这么多的人口跟用户群体，那合规肯定是一个必然需要经历的过程，我觉得。
OK， 我们今天非常感谢可以邀请到孔博士来到我们的现场，并跟我们分享关于 RWA 稳定币的一些未来的动向。对，然后那个孔博士可以在这留一个那个照片，好吧？我们的摄影师可以拍个照。对，
没有摄影师。
有的那儿的，有的。
谢谢主持人，谢谢大家。
OK， 谢谢。Okay, next we will move on to the next panel, the panel 2, RWA. The RWA is new infrastructure or just a better storytelling. RWA has become one of the most talked about topic in crypto. But today, we want to ask a harder question. Are we building real financial infrastructure or are we simply telling a more published story? Let's dive into the panel 2 and welcome our panelists. Okay, let's welcome our panelists. Forgiven from Conflux, Kate from Mob, Angela, our host, and Wudaokou from Plume, and JJ from Asseto. Please wait a minute. Maybe first I will be the host as the minute, and welcome our speakers. Maybe you can have a very brief introduction of yourselves.
Hi everyone, Kate here from Morph Network. Morph is a global, putting global finance on chain and with a payment settlement layer. The project? What?
Your company, yeah.
Morph is an EVM L2 based on Ethereum, and we have sub 300 millisecond finality, and we're working with a lot of different custodians like wallets and institutions, on-off ramp, neobanks, crypto cards, to become their backend settlement rail for hopefully one day all of the entire global finance to happen on chain.
Hey guys, it's great to be here. My name is JJ, co-founder of Asseto. So what we do is we are a RWA platform. We help a lot of financial institutions to tokenize their assets. Right now, it's been a year since we've launched, and we have over 380 mil of TVL on chain already. And we work with a lot of quite top-tier asset managers, such as China Merchant Securities, Shanghai Pudong Development Bank, China EMC, etc. So yeah, happy to be here anyways.
Hello, this is Forgiven, or you can call my Chinese name Yuan Jie. So I'm the Chief Shilling Officer for Conflux. I've been with Conflux since day one for about 8 years. Long enough that, seeing so many people like go and pass by. So we call ourselves like China Ethereum. The reason being we are probably the only project operating in China using our real names and not in jail yet. Yeah, so that's probably how we are different with the others people. Speaking of RWA, we have been working with Ant Financial, introducing renewable energy asset pack into the market, and we successfully redistribute RWA assets through the DeFi protocols to the stablecoin retailers. That has been a very symbolic case for the RWA market in Hong Kong. That's it for now.
Hey guys, I'm Walter. I'm the head of Asia for Plume. We're an RWA-focused chain, of which we have originated the Apollo A-Creds, the Invescos, the UBS of the world. Our current focus is really around how do we enable permissionless but compliant distribution and form the what we'd like to call on-chain capital markets. So thank you guys for having us here today.
Okay, thank you. And I want to have a question to ask for you all. For RWA to be the new infrastructure, it must be provide a marginal utility that the legacy system cannot, like 24 hours every day, automate settlement or hyper composality. If we move the crypto hype, what is one technical or economic features of your project that makes the legacy financial system look obsolete? Maybe from Kate?
I think there's many, but if I have to pick one, it has to be near instant settlement, where the blockchain can really process things much faster than the traditional rail. Not in the single transaction sense maybe, but in terms of stacking up transactions, interoperability, where you maybe buy a fund in an account right now, you cannot instantly get that to be a collateral for your perp position, for example. But if you change that to on-chain rails, you can instantly do that, removing middleman's approval, removing exchange gatekeeping limitations, where there's no very little geographic restrictions as well. So I think near instant settlement sees it all, but that term actually include vast implications following what we can do with your position or tokenized asset.
Sorry for the lateness. I'm the moderator. I'm an investment analyst at J Square, early stage Web3 VC.
We've done it already. Question one. Oh, okay. Yeah. So if I have to name like one thing has to be named. I'd go with programmability. So with everything, it will be able to be written into the code, and the rules and everything can be traveled with the assets. So it will be quite clear that who originated the assets, who can do the transfer, who can do the operations, and etc. So everything will be really clear with the programmability. And now we see TradFi sector and the DeFi sector is getting emerged. So we see a lot of opportunity that if everything is codable and it can be tracked to its original source, it will be easier for everything to go starting from today, moving forward. So yeah, I'd go with programmability.
Okay. I think I'll go with two things. One is liquidity. For liquidity, like for some money market fund, tokenized money market fund, they have worked with DeFi protocols or subscribers. Basically, if you send USDC into the protocol, they will, in return, give you the money market fund token like immediately. And if you try to redeem, you burn the money market fund token, and they will give you back USDC within 1 hour. That's actually even quicker than T+0, right? That's like within an hour, you can get the liquidity you want. And it's all automatic. That, to me, is something cannot be done by the TradFi. And the other thing is probably the distribution and also the entry bar is becoming permissionless, and the entry bar is very low. For example, for the the green energy asset pack that we wrap into the DeFi protocol on Conflux, that DeFi protocol basically provides a Morpho, like a platform that people can basically deposit their stablecoins into the RWA assets and enjoy a 8% yield. And they can, they don't have to KYC, and there's no a limit minimum bar for you to have to deposit. You can deposit $10, $20, and you can be from everywhere of the world and enjoy 8% yield, with a 3 months lockup. And if you want to have that, in the traditional, securities venues, that could be complex, right? So I think, and basically, it helps the asset owner to access capital from all over the world. So it basically reformed the way of distribution, and also it changed the way people participate. So that's the second part. I think the distribution changes. Thanks.
I think to just build on what you guys mentioned before, a very simple rule of thumb from my perspective is if asset issuers care about one thing, and fundamentally that's distribution. And so from that perspective, I think when you think about how can you do things in a permissionless but compliant manner, I think to all of your points prior, that's where you can enable a lot of the composability, a lot of the net new use cases, such as looping strategies, etc. I think at Plume, we kind of take it from the perspective of what does the overall stack look like? How do we design this in a manner that any asset issuer can basically plug in and then distribute, whether it's to brokerages or otherwise? But so I think maybe a bit of a cop-out, but that's the prerequisite, so to speak.
Got it. I guess moving on to specific questions for speakers. Here's one for Kate. The Lindy effect of the legal system is much stronger than a blockchain. In an event of a default for an on-chain credit asset, the smart contract is powerless against a physical court order. How is Morph building infrastructure that doesn't just record payments, but actually synchronizes legal finality on-chain?
I think I'll start with not just Morph, but blockchain generally. I think right now we're still in a position where the tokenized part happening on chain, it's a little bit separate from the legal part of what happens if things do default and the remedies you have available to get your potential money, if any, back. That happens in real life, which includes our legal system. That can't really happen on chain yet. But at least the future I foresee is that we don't just have a distributed ledger for transactions. We also have a distributed ledger for legal system, where maybe an oracle can pick up end result of a court case, and then it can be streamed on chain, just like prediction market events. And then that can trigger remedy distribution of assets with involved of the fund's trustee, their legal team, possibly signing multi-sig. I know this might sound crazy right now, just as prediction market probably sounded a few years back, but I do believe the whole ecosystem as a whole, not just Morph, is building towards that direction. And in terms of coming back to Morph a little bit, right now we have settlement that happens on chain. We have a lot of custodian partners like Fireblocks, where they plug in their treasury management and safety toolkits that happens on Morph, and also oracles like Redstone that provides proof of reserve where the underlying tokens assets collateral price or how much they're holding is streamed on chain every 10 or 15 minutes. So we're moving there, and then our tech team is working relentlessly to make sure if this happens, Morph will be one of the first players that make sure the legal rails also happens on chain.
I guess a specific question for Walter. A common critique of RWA change is they create liquidity silos. By building a specialized chain with Plume, what are you solving? Are you just fragmenting liquidity, or are you solving a desperate need for the broader DeFi ecosystem?
So I'll give you an example, right? So for the Apollo A-Cred asset that we originated from Securitize, there are a variety of different wrappers for the fund. For any given fund, who is the tokenization provider, and what is the version that comes onto your chain or elsewhere? I think all of that is to kind of say liquidity, or where liquidity is concentrated, is definitely a huge problem within DeFi. I think the approach we've taken at Plume, so as an example, Nest, which is our in-house vaults protocol, it basically functions to originate all the assets that we bring in. Even though Plume as ourselves, we have a chain, we've actually deployed Nest onto other chains, specifically, hopefully to help with some of this. In terms of fragmentation across DEXs, lending markets, everything else, I think the core assumption is that with efficient market pricing, or as an example with market makers, you would have it arbitraged out. However, I think the core approach that we take that kind of enables all this, which I touched on before, making sure that everything is sort of following a certain set of rules in terms of a compliant but permissionless stack. That enables you, with the A-Cred example I used at the start, to have the same implementation stream through layer 0 OFT or otherwise. Let me know if that sort of answers your question. Yeah.
Got it. I guess moving on to a question for JJ. Yield is a magnet, but composability is the engine. Many RWA tokens today are dead. They sit in wallets and can't be used as collateral. With your experience scaling TVL across protocols, how does Asseto ensure that a tokenized bond isn't just a static asset, but can be seamlessly integrated into restaking, money markets, and liquidity provision without introducing systematic risk?
Okay. It's actually a really good question. So let me give you guys an example. Like before I got here, I was with a guy from Pando. So I took this guy to one of the top asset managers in Hong Kong. And these people are from like different world, basically. So they don't, the TradFi guys, they don't understand what PTYT is. But with us as an intermediary, and we provide middleware, in that way, we can actually bring the top traditional finance products on chain, and then also we can integrate them organically into the DeFi sector. For example, like Pando is like one of the top protocols we see in this cycle, and we can actually break up this pretty traditional stuff into PT and YT, and then provide the on-chain users with the top yield, like top-notch yield the industry can actually provide, especially with the market right now, like with the market drawdown right now. We see a lot of, no matter on Aave or other lending protocols, we don't see a lot of yield coming out. And we don't see a lot of borrowing demand. In that way, like, you just can't get that much yield. And what we do is we can actually bring the best-in-class assets and the yield, various of yields on chain, and then we can integrate them into the DeFi sector, and just merge those two worlds together. So we figured if that's not value add, what is? So Yeah. So and that's just a starting point. So we're getting there. Yeah.
Got it. I guess a question for Forgiven from Conflux. In your experience with endowments and fund of funds, what is the deal breaker that prevents institutions from moving onto a public L1?
I think there are two things. So first is like compliance issues, right? For example, in Hong Kong, for every RWA assets issued on a public chain, they have to go ask permissions of SFC, right? And for chains choices, options, they probably say, okay, Ethereum is okay, and Solana is doing the lobby. And for Conflux, they say, oh, who is Conflux? Probably it's a shrimp. Is it secure enough? The market cap is so low, right? So sometimes because it's a compliance business, so they may have issues with the, like the L1s they are working with. That's one thing. The other thing is once institutions and banks, they move to L1, okay, that actually changed the entire system of accounting and their finance systems. How I'm gonna book the stable coins, the RWA assets I hold on chain. Is that auditable? Is like a CFA or like ACCA or like ACA, all this accounting system can be, like part of the crypto business. I think it's still far away from, like incorporate the crypto world into their accounting systems. And now things becoming better after some custody firms becoming compliance, and they use the custody reports as of the evidence for their accounting systems. But that also could be an issue, right? And the third thing is actually the custody itself. For, let's say, if you hold assets on chain, not at exchange, what's your wallet? Is that a custody wallet? Is that a multi-sig wallet? Is that an MPC wallet? Now, how is the internal control can be maintained by the finance department? What if it's an EOA account and your accountant people just lost the private key and all the assets is gone, right? And that could be horrible, right? So I think there's a long way to go for like institutions to really participate on the on-chain systems. So I feel like right now the institutions are more on the sell side instead of the buy side of the on-chain, like on-chain portfolio management. Moreover, it's more like a hedge fund, exchange, or crypto native people are holding assets on chain, and they care less about the accounting systems. And yeah, so it has a long way to go. Yeah, that's my 2 cents. Thank you.
Thanks for that. One question for JJ is, when people buy RWAs on chain today, most people just buy and sit on it. As yield infrastructure, how do you solve this problem? The idea that an asset is liquid on a DEX but has 0 buyers when a large buyer needs to exit a $50 million position. How do we move from static tokens to productive collateral?
I have it. Yeah. So I think it's a question more about how to exit freely, and also it's a question about liquidity. So yeah, as we all know, like we now have 29 billion of tokenized assets on chain already till today, and it's actually not a small number. So we do have a lot of real-world assets brought up on chain, but many of them are sitting idle, and also there's no secondary market. So that is why people having concern, how to exit freely if they have 50 mil and they want to get out. Like, how do we do that? So we actually orchestrated a solution for this specific problem. So the way to go is we are working on this smart router so that other than the primary minting and burning process, primary subscription and redemption process, users can actually get instant liquidity through the secondary market through our smart router. So for small amount of redemption, it's easy. You can just go to the AMMs. You can just go to Uniswap, PancakeSwap, for example. If you have like medium or large liquidity necessity, if you have to get out, then we have RFQ. The reason we have RFQ is because if we don't provide them with a very stable stable price, when they get out, the market makers would just not join this party. That's why we have RFQ as a middleware. And for any size of amounts larger than that, we have primary redemption, which is pretty straightforward. You just get the assets outside of, just get the assets out of the underlying assets. It's pretty straightforward. And for many of the assets we brought on chain, like the liquidity is pretty sufficient. So like T+1 or T plus couple days, like T+7, which is very tolerable for many of the on-chain investors already. So that's how we structure it, like a layered waterfall mechanism so that users can just exit in the way they prefer. Yeah.
Got it. Thanks. I guess a question for Walter from Plume. Plume talks a lot about RWA DeFi. Traditional finance uses rehypothecation to juice returns. In a decentralized RWA environment, how do we enable high capital efficiency without introducing too much leverage in the system that led to crypto collapses in the past?
So I think the fundamental thing of rehypothecation is basically default risk or bad debt risk. The most, one of the prominent examples is probably 3 Arrows Capital and the debt contagion that followed from there. Fundamentally, the question is, if I'm providing you a loan, what is the collateral and what is the value that I can get even if the asset is distressed? So as an example, with a lot of RWAs, I'll use the ACRED fund as an example. Typically, you can actually even have someone come in that would, in traditional markets, you have someone willing to come in and buy distressed debt at cents on the dollar. Functionally, it's a little bit different from market making. It's closer to something like a credit book or a backstop. I think with that in mind, when it comes to rehypo, the core thing is really who is writing or underwriting the loans against it. You have the examples of the curators for Morpho, but fundamentally for every asset, you'd have to find the right person to essentially diligence and price it appropriately. So if everything is baked in and the LTVs are reasonable, which is a big assumption, it should be a practical impossibility for this to happen again.
Got it. I guess moving on to a question for Given. Stablecoins are very easy because the peg is easy to verify, but as we move into more complex assets like private credit and private equity, we face a massive asymmetry of information. How can blockchain native infrastructure truly verify the health of a real world loan without relying on a centralized human auditor?
Sure, I think for RWA, it really lies with like transparency, like jurisdiction, and also kind of communication. So when I say transparency, let's say take stablecoins as example. You go to any stablecoin projects, they have a transparency report. So actually when USD1 first launched, I always mock it, hey, this is Trump stablecoins. It's all endorsed by Trump's name. It's US president stablecoin, that's good. You don't need like transparency reports. So I kind of public talk about it on Twitter and mock it. And then later on, they actually release their like transparency reports. So I think, okay, that's good. That's a good sign. At least they have transparency report about do they have enough money in the bank. So that's the same with the private credit thing, right? You have to disclose what's the underlying assets, operation status behind the private credit, right? If it's a portfolio of companies, what's the ratings of those companies? If it's a private credit pertain to, let's say, real estates, how is the mortgage compared to the property price, right? It's all coming with like healthy status. So with full transparency, the investors can judge, whether they want to pull out or they want to continue to stay in the game, right? And the other thing is, I think it's about like jurisdiction, because like in certain environment, the jurisdiction try to do their best to protect the investors. Right? You don't want to go to any emerging market. Their legal system is not well set up, and their government is not stable, right? Because in that case, their policy could change swiftly, and your investor rights may not be protected well, right? So that could be another issue. And the third thing is actually communication. As Walter just mentioned, now we have the roles of curator emerging from the Merfolk platform, right? All those curators should do their jobs to clarify and elucidate what are the underlying assets they actually have their investors into. We see the USDX blows up. Many of the curators are actually in trouble. They didn't do their jobs, and they didn't do the communication. I mean, in the traditional world, like all companies have this quarterly financial costs. What do we have? Probably we should follow similar patterns, do communications at frequent occasions, so we know what we are investing to. So I think all these parts can help to clear. And also the fourth part is the technology part. Very interesting example that I want to mention for the green assets RWA issued on Conflux. It's actually a battery swap station for motorcycles. So we work with Ant Financial and Ant Technology. Ant Technology actually have these IoT devices attached to the battery swap stations. So they are monitoring the subscription status and battery swapping operation status of those underlying assets. So they know whether it's operate in a healthy status. And also they have a designated financial account at Alipay to collect the pay from all the subscribers or the one-time users for the battery swap from those motorcycles. So they first collect the money and pay the dividend and the principal to the RWA holders, and then they give the rest to the operators. So with both financial and also the operation data monitoring and controlling, the technology also helps to maintain the healthy status of the RWA underlying assets. And they also use Oracle to continuously push the data on chain to allow the investors to monitor the situation. So I think all the technology, the financial principles we follow, this could all help to solve the issues of the complex of the more complex financial securities. Thank you.
Thank you. I guess a question for Kate. As an infrastructure lead and former lawyer, if the bridge between the physical asset and the on-chain token is a centralized entity like an SPV, isn't the blockchain just a very expensive database? Where is the frontier in decentralization?
To keep my answer short, because I think we're a little bit running out of time, I think, no, it's definitely not just an extensive database in the sense that right now, in an earlier example I gave, blockchain pretty much enable, let's say you can purchase a fund and then it can be a tokenized fund, and then you can use that as a collateral. You can possibly put that into AMM DEX, collateral for your perp DEX positions. So in terms of not just timing and market efficiency, especially cross-market interoperability, in that sense, in that direction, we are getting there, making things extremely efficient. That itself enables much more different use cases, loopings, stacking strategies. But in terms of the legal risk remedy side of things, I think we are getting there with earlier mentioned as well, proof of reserve that streamline collateral position of some tokenized assets, underlying positions, almost real time on chain. But it takes some work if the rails want to connect further legal side of things, trustee, setting up of entity. I think there are innovative projects in the US where there's DAOs that happens on chain that's in progress. But in the closer we touch legal, I think the more work needs to be done. But at least for now, the entire industry is progressing towards that direction.
I guess a closing questions for our panelists. Anybody can feel free to pick up. If the yield on T-bills vanishes tomorrow, which RWA sectors do you think will remain viable? Is it private credit, tokenized gold, tokenized cross-border payments, or any others? Feel free, anybody who wants to pick it up.
I guess I can start first. For me personally, I think on-chain remittance or the efficiency enabled by the blockchain in terms of cross-border payments, be it crypto card or on-off ramp or just paying your PSPs, because that, I think a lot of us here would have used it and enjoyed that side of efficiency. So I think even without the yield, that in itself, it's a real utility that it's really an unlock for me, at least personally.
I have a pretty straightforward answer. Just let the market bloom. So the market will do its picking. So what we do is we bring the assets on chain and let the market do its work.
I have my own theory. My theory is built on how the world is actually shaping up. So I think in the short term, commodity actually can become a very popular RWA assets going forward. Gold is a very apparent trend given it's in the bull market. And the central bank is accumulating gold. And people from the crypto world actually are buying into the gold tokens directly in exchange. But I think maybe, let's say, copper, still, these commodities can be also popular given the world is actually going to a more wild situations. The countries might want to pile up more commodity for defense reasons. So, and all those commodity could enter a bull trend. So it could be an interesting thing to unfold. And the other thing for the long terms, I think I will give a very bold guess, which is electricity. I think Bitcoin is actually a very early symbol sign of how electricity manifests in currency mode. And going forward, everybody knows AIs, Bitcoin's minings, and maybe robots and EVs, they all eat electricities. And US is now running shortage of electricity, and they even import high voltage electricity transmission technologies from China, right? And going forward, China probably has the world's largest electricity storage, transmission, and producing, and also technologies. And if China wants to make its own currency the anchor of the world, what can be the anchor? It will not be gold, and it will not be oil. It will be electricity. And how to make its national debts relevant to the electricity itself and make the electricity yield to become of their national debts instead of anchoring its currency value back to oil or gold, that could be a new way because all the new technologies are reliant on electricity. However, the problem with electricity RWAs is that they are not liquid, they are not standard, and they are fragmented. How to make it a united asset? How to make it a unanimous unit for all over the world to trade around it and make it a large, such big market like US Treasury market could be a very big market for many years to come. Thanks.
Thank all you guys for your great insights. This is.
Oh, okay, all good. I will speed run this. I think if you look at the different asset classes on chain, they are all very idiosyncratic. They have their own, different caveats. In that regard, credit assets basically repriced mark to market over the last year. I think at Plume, at least for myself personally, we're extremely bullish on option strategies as a next leg of what this basis trade looked like, CLOs. Things of that nature. But I think to expand on what JJ was saying, basically let the market bring the assets on chain, find the innovation, and then fundamentally from our perspective, have the best assets to select and to deploy into and to use. Yeah.
Thank you guys for all your great insights. This is the end of the panel. But
hello, the take photos. Okay, thank you for our panelists. And next we will have a 15 minutes break and you can have your networkings. And come back in 20 minutes and we will have one more keynote and 2 panels about payment and the DeFi and CDeFi. So now you have a 15 minutes break.
So I weave reality into a frequency, preparing to ascend. Spinning around inside. I can't rewind the time. Time is a friend.
Welcome back, everyone. And let's welcome Mark at Interlace for the keynote.
Wow. Oh, my God. Hey, everybody in the back. Hi. How's everybody doing? Good. We're going to have a keynote here. I'm trying not to make it boring, but I have to say that that's not mine. Oh, there we go. Okay, I'm going the wrong way. Which way? All right, I figured it out now. Sorry, guys. I have to, hey, Maria. I have to start this off in the most boring way possible, so I hope you'll forgive me for it. Before I actually do my topic, I have to tell you who I am, what we do, because it's going to be important later. So, hi, my name's Mark. I'm the head of business development for Interlace, and Interlace is a company that does banking as a service and cards as a service for crypto companies, fiat companies, people doing media cards. We're kind of the people that interact between the banking layers and the crypto people that are in this room today. So we're a licensed institution, so we have to play with those nasty regulators that nobody likes, the tax things, the unfun stuff, and then we get to talk to the really cool people in this room who are, making new things and trying to innovate. And so I'm actually going to say Fablecoin or Stablecoin. That was my topic today, because there's a lot of mysteries and things that people don't understand about the industry right now. And I'm lucky because I sit every day talking to people who are actually bringing these new products to life. So anybody that is trying to build something, they're talking to me. And then when I go back with my team, I get to talk to the bankers and the FI people and the licensing people and the people who actually talk to the banking side. And so I'm kind of stuck in the middle of this development that's been happening. And I got to say, it's amazing what's been happening because previously we saw a pretty horrible situation. And nobody was really doing anything about it. I also happen to be an expat and I live overseas, so I'm one of the people that was on the receiving end of a pretty terrible situation, infrastructure situation for a lot of different industries for the past, I don't know, 5 to 10 years. You had a technology sector that was able to do a lot. And you had a regulatory environment and a banking environment that didn't want to do anything. They're sitting there, they're just saying, everything's fine, I'm fine, right? Why? Because I'm in control, right? And there was unfortunately a ton of people left out of that legacy system. And the bankers didn't care about it. Why? The banking systems didn't care about it. Why? Because they care about the mass, the most people, the average person. And an average person, losing 5% doesn't matter, right? If you have 2 to 5% on the side of a tertiary part of a business, it doesn't matter. However, when you look at the different areas that the traditional banking system left behind, there's a lot of them. There's quite a few. There's high risk and there's de-risked, debanked industries. There's trade, small cross-border trade. We do a lot of e-commerce, a lot of ad buying, where people are, buying ads in one country from another country. We have unbanked populations in countries where people don't, where it's just run badly and they just don't develop the infrastructure. And you have, emerging market consumers, right? Digital labor. People who are, doing work on gig workforce, right? These people are all left behind. And that didn't matter for a little while until it did, because what is happening right now and what we see, because I sit on the end and every few minutes I get an update of a new company that came on our platform and a new person that inquired about API, I can tell you that every few minutes, one of these people from one of these industries is coming into our platform, and they're coming in to, solve their problems of, not being able to access the normal banking regulatory environments of the different countries, right? So what we are seeing right now is that companies like us are bringing together a lot of these 5%. And so when you add 5 plus 5 plus 5 plus 5, right? It starts to add up pretty good. And that's what is really interesting about crypto and stablecoins is what we see from the people that are on the front line is we see them actually tying together a lot of the tertiary businesses, global businesses that were underrepresented before. And they weren't able to access services. And so what you're seeing is not, hey, we're decentralized, awesome, let's go. Like, we're decentralized stablecoins, anyone can send it anywhere. That's actually not what's really happening. What people are using stablecoins for now is to solve real business problems like, hey, I've got people I need to send $200 to in that country, and I can't do it via SWIFT. So what we're seeing, this is what I deal with every day. And I think this is what stable coins are going to be in the future. What is really developing is that we are getting our products into the regulated markets in a way that works for these tertiary businesses. And when you take tertiary businesses, you add them together, they're actually quite significant. And so it's funny because we're using stable coins as a tool, but we're feeding them, we're basically getting regulatory approval, we're getting banks to accept them, you're seeing Visa and MasterCard looking at accepting settlements in USDT, and this is where I see and we see the market moving, and it's where we're moving to is we see the market moving to taking all of the products and services that you see in a normal bank environment in a single country under a fiat regime, and we're taking that and we're making decentralized global versions of that, right? And we see it every day. We see it, and again, I sit in the middle, so I see it. I get the company over here that's doing debt products is contacting us, and then we've got the companies over here that want to offer the debt products for their credit cards to their users. And so what we're seeing right now is a coming together. The fact that the stablecoins is an acceptable product to the banks, to traditional regulators and banking industry, it's getting us able to move into these markets more and more, to get acceptance, to get regulatory approval for a lot of things. And now, because of that, we're able to do a lot of things that are, quite frankly, directly competing with them. And I believe that we can win, actually. I think that overall, the banking sector, I would say, I don't think that the banking sector ever has to worry about being the primary way things are done in a country. But I will say that a significant portion of global economy can be run on stablecoins, and it's moving that way when that industry organizes itself enough to have enough of the products and services that are usually found in the local banks and under one regime that actually operate globally, because we don't have that right now. We don't have a safe way of, doing debt and having credit. We don't have now, but we have the beginnings of it. Okay? And so from our perspective, from sitting between these regulated banks, fiat industries, and the clients, we see a lot of development happening overall that is bringing this together and becoming a cohesive global industry that backs everything up. And I just have one point, and then I'll close it, because everybody, obviously, it's a great week here. We want to get back to it. So my point is this. We as a group, everybody in this room as a group, we need to keep moving forward and keep bringing it together in a cohesive way. We need to keep pushing the envelopes and keep bringing in the new ways to do things, because the individual countries, if you leave it up to them, if you leave it up to the banks, they aren't going to do it. They're going to leave, they're going to stay in their safe little castle, and they're going to build things from there. And they're not going to build anything that's usable cross-border. So we have a chance to keep moving forward, to build this industry into an actual global, accessible, with all the earmarks and I don't know how much it can take, but I don't know how big it will be, but I know that it can take a very large, significant portion of global trade, and we can tie all these businesses together to the point where we are competitive with the fiat regimes. And so if I have one message for everybody, it's keep moving forward, keep building, and keep going. Thank you.
Thank you, Mark. Very inspiring. Take a photo there. Take a photo there. Yeah, just you for this event. Okay, thank you for your. Okay, thank you. And now this is our panel 3 about stablecoin payments real adoption in the emerging markets. This panel moves us beyond the theory. We will look at why users choose stablecoins over banks, what problems they're actually solving, and whether their user case can scale. Let's welcome our panel host, Lin.
好的，各位嘉宾、各位行业同仁，大家下午好！终于来到咱们中文的这个 panel 了啊！下面有请咱们本场 panel 的嘉宾。大家好，我是郝莹司令，清华五道口的金融 EMBA 郑瑞麟的董事长，同时也是清华五道口区块链俱乐部的会长，算是咱们这个行业的10年的老 Web3 选手了。今天到场呢，也有很多我们的朋友。 那今天呢，我们来聚焦稳定币在新兴市场的真实落地、核心价值与规模化路径，我们来开展一场务实的对话。下面我们来有请一下我们今天下午的嘉宾 Jessica、Simon、Will 和 Louis， 欢迎各位。 好，请就座。好的，感谢，欢迎各位。今天呢，那让我们来先进入今天的论坛的一个核心环节。那我们先来自我介绍一下啊，然后在开始之前，我想先请每一位嘉宾简单的介绍一下自己，同时呢，介绍一下自己目前正在做的事情，同时回答一个问题，就是你看到的。同时，最真实的一个稳定币的应用场景是什么？它可以是一个国家、一个行业，或是你最近发生的案例。好，那我们先请 Jessica 开始。
好，谢谢主持人。大家好，我目前是 Huma Finance 在亚太区的 CEO。然后 Huma Finance 做的事情就是稳定币的实际应用的落地。在过去4年半的时间里面 ，Huma Finance 已经 power 了超过10个 billion 的稳定币的在真实世界里面的使用。那我们就先从例子开始举，再讲我个人啊，因为我觉得事比人更重要。那么我们做的事情就是。当你在用一个汇款公司做跨境支付的时候，作为 C 端的用户，你可能没有察觉到，就是实际你在周5晚上汇款的时候，它在银行其实系统已经完全关掉了。那在这样的情况下，你的收款方怎么会在2个小时之后就拿到一笔美金呢？或者拿到一笔本地货币呢？那个中间一直是有人在垫资的。那么在这个已经 Stablecoin 的渗透率这么高的世界里，在亚洲已经有350个 billion Stablecoin payment 的世界里面，我们就是那个承担重负的人，就是负重前行的人，推动前行的机构。我们就是能够帮助这些汇款机构、支付机构、跨境贸易融资机构来帮助给他们在银行的时效性没有办法达到需求的情况下，给他们来做垫资的。所以我们是一个 to B 的一个 stablecoin 的 financing layer。然后说到我自己，我是也是一个支付背景的，之前在蚂蚁国际负责稳定币的业务和金融机构的合作，之前一直在外资银行做这个衍生品和各种外汇产品。
谢谢 Jessica。那我们有请 Simon。
好，谢谢主持人。我Simon李，来自 Interlace。在加入 Interlace 之前呢，我在 PayPal、在蚂蚁科技，这些支付fintech 公司也工作多年。Interlace 是2019年创立的，它的核心使命呢就是让稳定币落地于日常消费之中。我们主要是提供CAS 和 BaaS 这种解决方案。就 CAS 就是卡级服务，BaaS 就是银行级服务。通过我们这个底层架构或者我们的平台，我们赋能一些像钱包交易所PSP 还有一些 New Bank，给他们提供发卡能力，让他们的平台的用户可以通过刷卡或者是Scan to Pay 这种行为完成稳定币的消费。为了说明这个稳定币的价值我用个真实的案例来说一说我们有个客户是香港的客户，他主要是从南美进口一些蜂蜜过来，在本地销售。南美的蜂蜜，特别是阿根廷的蜂蜜，是特别有性价比比较高的。但他成为我们的客户之前他最大的一个困扰就是怎么给这些南美的客户去汇款。虽然金额不是很大，可能也就1万到2万美金。但每次汇款这个繁琐，而且时间比较长。最关键是钱到那边以后，他的客户经常会发现，怎么会有些额外的费用？比如说1万美金可能多了几百美金的费用，经常会说不清道不明。还有些时候钱不知道在哪了，这种 trust 很难建立因为你是不是打了钱了？我打了，那在哪了？怎么过了这么多天还没收到？所以他的业务一直不能够拓展开来。后来他用了我们的产品，结果就是基本上稳定币就是实时可以到，费用可以忽略不计，业务一下拓展起来了。这个不是一个单点的案例因为现在我们看到拉美很多国家，普通人已经把稳定币作为这个日常保值、对抗通胀的一种手段。然后在东南亚，我们也看到那些是跨境的自由职业者他们把稳定币也作为他们的一个收款的一个主要的手段。在非洲、中东这种形式也非常普遍。所以我想说的是，就是稳定币现在已经从一个试验逐渐走向一个大规模应用的阶段。2026年呢，我们的一个核心策略Interlace 核心策略就是加快我们在东南亚、南美的一些 拓展的速度啊。所以呢，以我在场啊，以我在这东南亚、南美有资源啊，比如说你在当地的钱包啊、交易所啊或者 PSV 有钱包呢，因为我们要赋能这些机构嘛，让他们的平台用户可以通过刷卡或者二维码支付，能够完成稳定币的消费，可以和我们联系啊，因为在场我们有很多 Interlace 伙伴啊，你看那些长得帅的，基本上都是我们的 Interlace 的啊，谢谢。
感谢 Simon， 感谢，有请 Will， 请您来给我们介绍一下。
那个听完 Jessica 跟 Simon 的那个反馈，感觉这一场很值，刚好都是我们最近在解决的事情。我们刚好也是下周正在发行阿根廷的一张信用卡。
哦，是吗？
一张 crypto 卡。对对。我先自我介绍一下，我是 Will， 然后我现在负责的是 Bitget Wallet 在全球的业务增长。那大家比较多听到 Bitget 应该都是对交易所这一块。那 Bitget Wallet 是一个自托管钱包。就跟交易所这边是完全独立开来的。那我们钱包这边最主要几个业务，基本上就是围绕着你去用全部你在 Web3 DeFi 相关的东西，都可以在钱包里面去达成，从交易到理财，那到支付。那尤其是理财跟支付这两段，基本上是我们最近最主打的。我们在主导一个东西叫Everyday Finance， 就你基本上你每天的生活都可以用这个钱包去达成。就刚刚像 Jessica 跟 Simon 提到的，像跨境付款，或是日常生活的支付，尤其是像刚刚提到像中南美洲，然后非洲还有东南亚这些地区，我们都有覆盖。那像现在我们有几个支付的服务，包含在菲律宾、越南，我们有 QR 扫码。然后在亚太区，我们在今年也全面的都发行了 U 卡。那接下来会是去把整个拉美地区的 U 卡覆盖清楚之后，还有整个这个跨境的汇款这块，也是我们目前看到，包含刚刚 Simon 特别提到的一些汇率的问题，还有 Jessica 刚刚也有提到的一些时间的问题，这些其实都是我们现在比较专注的点。那我个人的经验，我可以跟大家分享两个事情，一个是Web 2的经验，一个是 Web 3的经验，刚好同时间发生在一天。我那天需要打一笔款项到泰国的银行去，用传统银行打的。那笔款项我去银行需要搞整个手续3个多小时，然后等1个小时，然后最后那笔账有没有到款，我其实不知道。那同时间我打了一笔钱给我在非洲的朋友，他的银行用的是非洲的转账支付，是秒级的就能够马上到账的。这其实就是现在 Web 2跟 Web 3之间正在发生变化的一个点。对。
感谢 Will， 那有请我们 Louis 来给我们来做一下介绍。
大家好，我是BitsLab 的 co-founder Louis。我其实差不多是17年进入区块链行业，但我其实研究 Stablecoin 非常早，就是在17年的时候，当时我就写了一篇关于 Stablecoin 的这个文章。当时其实对 Stablecoin 的讨论其实是有挺多的，包括像这种抵押稳定币、算法稳定币，还有像 USDT 这种类型的，就是所谓的当时叫中心化的稳定币。那其实随着时间发展，其实慢慢的，其实 USDT 这种方式已经逐渐的成为一种主流的一种方式，而且是合规监管的一种方式。那作为行业，就是在行业这么长时间，我个人认为其实可能过去5年或者说应该从16年到现在应该有7、8年了。其实 Bitcoin 应该是一个其实还是一个最大的一个故事，也是大部分行业里面所谓行业老人他们赚钱最主要的方式之一吧。那未来我认为从去年或者开始吧，我觉得 Stablecoin 是未来5到10年一个大的一个事情，就无论是创业还是去做一些套利，其实 Stablecoin 我们都认为是一个主要的一个方向吧。那 BitsLab 我们本身其实是一个安全机构，我们每年大概会审计100-200个吧这种新的项目，除了做审计之外呢，我们其实自己本身也在做一些 infra。主要是2个方向，一个是偏反欺诈，就是保护这些终端 C 端用户不会被钓鱼，不会被一些诈骗。另外呢，我们也自己在做一个嵌入式的一个钱包可能 Bitget 是那种面向 C 端的钱包，我们更多是面向开发者，这样它可以有点像 Private 或者 Dynamic 那样，但是我们可能更偏向于为 Stablecoin 以及 Agent 的场景来做一些优化，对。 然后刚刚主持人有个问题是说，个人用 Stablecoin 的一些场景啊，其实我们是非常典型的币圈赚钱，币圈花。我们所有的这些收费，我们审计每年大概就是有上百个客户，可能所有的交易我们都是收 Stablecoin。对，因为像可能不像17、18年那个时候，当时有很多亚太的一些创业者，他们融资都是用以太或者用比特币来融资，但现在其实大家都用 Stablecoin 来融资，所以我们收审计费也大部分都是以 Stablecoin 为主。那我们其实我们支付费用也是以 Stablecoin 为主，就是像我们的云服务供应商。他们现在包括其实即便是像腾讯、阿里，它的代理商都是用 Stablecoin 可以来支付，然后所以我们大部分的一些支付场景，除了可能少部分情况下发工资的话，其实有一些人是可以因为我们是新加坡的主体，我们有同事在美国、在新加坡包括就是有在哈萨克斯坦。这样一些同事，我们其实可以跟他签一些合规的协议，就是新加坡主体签，然后发 Stablecoin。有一些可能有一些这种 contract 可能是在，比如说在亚太，那我们也可以通过这个合规的方式，把这个稳定币换成法币，然后再发给他们。所以其实我们是基本上所有的这个 BitsLab 的经济活动都是在 Stablecoin 来支撑的，对。好，谢谢。
感谢，那真的是越来就是从你刚才说的，我很有感触啊。从17、18年，大家当时来做项目的时候，募的都是以太和比特，现在大家都有 Stablecoin 了，确实是。咱们的这些老选手肯定都能够感受到这个时代和行业的发展。那接下来呢，我们会进行我们单独的这个问答。首先呢，要先问一下 Simon。我想问一下 Simon， 从你们实际跑的传统的从你们实际跑的咱们的这个跨境支付和商户业务来看，企业为什么会选择稳定币而不是银行？当然，你可以谈一谈最核心的原因，就是企业为什么他愿意选择稳定币而不是选择传统银行呢？
我总结一下吧为什么他选择稳定币不选择传统的金融呢？我觉得无外乎就4个字第一个是省，第二个快，第3个是通，第4个就是稳。省当然是省钱了前面我们也说了很多嘉宾也说过了你通过传统的金融比如说 TT 电汇。其实这中间有很多费用中间行的费用、汇损、落地行的手续费加在一起不少，特别是在某些地区更加可怕所以对中小企业这是不小的负担。但一用稳定币来，其实这费用基本都可以忽略不计通过我们自己的数据通过 Interlace 自己的数据，用我们的产品来做这个 transfer 就是跨境支付的话，大概可以省90%的费用。
这个是真的不少的，90%。
第二个呢就是快时效性呢极致的提升，因为传统的金融还是那个什么，周一到周五早上9点到5点，银行上班你才能做。
对。
然后呢，因为你中间有中间行，每个地区的时差又不一样。但是我们的供应链，我们的传统的贸易是什么？7乘24小时，这中间就有很大的 gap。你怎么去弥补这 gap？ 传统金融完全做不到的，而稳定币不存在这个问题，完全就是7乘24小时，所以在时效性上是远远超过传统金融。那这个时效性呢，就让企业就可以很快的发货，然后呢收付、回款，这可以把整个供应链的那个周期压缩了。第3个呢就是它通我说通呢就是。稳定币它天然具有全球性就是你只要能上网、安全上网，你就基本上就可以安全的收付不像那个传统金融，你要开设本地的银行账号别说它开设的难度，就是你开设完了以后还要去维护它，还有成本我举一个例子马斯克的 Starlink 这个项目，就是通过卫星把那个网络把那个数据传递给大家可以使用这个项目很好，特别是在发展中国家，其实有很大的需求。但是呢，它在前期推广的时候 其实停滞不前。一个重要的原因就是什么？怎么样收这个服务费？很多发展中国家的银行基础啊非常薄弱，不容易付钱出去。他们的 subscription 啊，这个续订费用呢也不稳定，所以呢他们一直停滞不前。直到后来他们用了稳定币支付，用稳定币可以来付你的那个续约啊、服务费啊，一下就拓展了。现在就很快拓展到100多个发展中国家。最后一点呢，就是它的稳啊，稳是指什么？它天然具有对抗了汇率的波动，还有外汇管制啊。像南美很多国家，他们的汇率变动很大啊。你前面过5关斩6将，好不容易收到了你的钱，但没完，可能呢第2天你的贬值就去了20%、30%都有可能。所以对中小企业，这就是资产的流失。更可怕的是什么？外汇管制。在2025年4月之前啊，阿根廷啊，你作为一个企业，你收款了以后强制结汇，啊，你的美金结成比索。那对他们来说呢，结成比索了，我是资产已经损失了，但如果我要付款给我的供应商，又是另外一道难题，怎么把款付出去？它没有硬通货，美元不能自由结算，这又是个问题。所以呢，我们 Interlace 的核心定位啊，就是把稳定币这个高速公路啊，无缝的对接到现在的企业的应用场景当中。我们同时呢，在背后做好了合规、风控、清算、发卡的这种基础建设，啊，帮大家完成最后1公里这个使命。这就是为什么啊，核心的驱动力就在。
感谢感谢，你说的这几个字的总结实在是太好了。那接下来我们有一个问题问 Jessica。下一个问题呢，我们要问 Jessica 的是，在新兴市场中，有哪些类型的真实支付流是真的适合搬到链上的？那有没有一些你们后来觉得，有一些不合适的？请您来给我们来介绍一下。
我觉得所有的有痛点的支付流都可以搬到链上，所以就是说，如果我们稍微把金融史稍微拉得长一点，因为其实区块链是一个技术手段嘛，对吧？实现的是说我怎么能帮助用户创造价值。如果你反向去想的话，现在站在2026年今天，欧美市场最大的支付工具是什么？信用卡。亚洲、东南亚最大的支付工具是什么？电子钱包。为什么？因为后起之秀。因为在卡还没有普及的情况下，支付宝就创造电子钱包，创造 QR card。同样的，在汇管国家、汇困国家，在汇率高度波动的国家，可能它没有银行卡，可能电子钱包还不够充分的情况下，它已经获得了一个自托管钱包。在这样的情况下，它就可以迅速的能够把使用稳定币渗透到它的生活中的一部分。所以你可以简单的讲，就是说，它在没有建造马车的情况下，它就有高铁了。所以我觉得这个是非常符合金融史和科技史的发展的基本规律的。那么有没有一些场景不适合使用？我觉得目前，除非一些强制货币国家有相关的监管要求，说，它不合规，对吧？我觉得这样的情况下，从长远的来讲，也不是符合金融史的发展规律的。但是从纯技术建设的角度上来讲，我觉得没有什么不合适的。所以我们就非常期待整个稳定币的渗透率进一步提高。
谢谢 Jessica， 我觉得您回答的真的给我们大家有拨云见日的感觉。那接下来我们有一个问题交给 Will，我听说啊，就是 Bitget Wallet 最近一直在强调 Everyday Finance， 希望让稳定币进入到咱们日常的使用场景。那么从你的用户数据和实际使用情况来看，哪一些的日常金融场景是真的跑起来了？有哪一些还在概念的阶段？请您来给我们介绍一下。
如果是从数据面的角度，我们刚做了一个年末的总结。我们去年整个在 U 卡这一端的业务成长了28倍，在消费块。那还有另外一个，其实在稳定币这一块还有一个比较重要。刚刚大家提到蛮多的汇率波动，我们还有一个产品是做稳定币理财。稳定币理财这一块的这个整个增长，去年从年初到年底增长了10倍。所以整个在我们平台上稳定币的增长是非常明显的。那我去跟大家多描述几个场景，我们现在实际跑起来了。比方说我们现在在越南的这个扫码支付，它的这个实际上应用起来是有很多的当地的数位游牧 digital nomad， 他们可能是来自于泰国，可能来自于台湾，或者他可能就是来自于国内的一些游客。他本身不会换这么多的当地的货币，但他有一个钱包里面随时都有 USDT， 他都不需要去考虑他到底要换多少钱，他可以马上随时随地都去扫码。那为什么我们会在越南这个地方去接扫码支付的原因是，它已经覆盖了95%到96% 的这个扫码，你连路边跟那个摊贩的阿姨买水果，都可以去用扫码支付。在这个情况底下，等于是你基本上用一个钱包就可以把你的稳定币花的各式各样的花样都可以用。那同样的这个支付方式也发生在像菲律宾跟巴西，我们也做了这样的支付。那另外一个点就是我刚刚提到的，我们还有另外一个产品叫做银行转账。银行转账这个产品就是你可以用你的 USDT， 你现在就可以打一笔账到你在非洲奈及利亚的朋友的银行账户里面。它会马上变成当地的货币，还有墨西哥。那这个东西基本上就是刚刚也有提到的跨国服务的一些用户，比如说他其实是本身在非洲的人，但他其实到其他国家去工作了，他要怎么样把他的钱打回去他家乡里面？那这件事情其实在这1-2年越来越多，有的可能是有一些战争的关系，有的可能就是因为跨国一个工作的关系，所以这样子的一个跨国转账的 pay in pay out 也是我们现在在看的一个很重要的场景。那刚刚最后还有提到了一个点，就是还有哪一些我们可能还没有很好去实现的？我觉得这个点会是一个大家可以听到我刚刚在聊的，基本上都是一个区域一个区域这样一块一块一块在聊。其实每一个区域他们对于这样子的痛点跟需求都长得很不一样。那等于是我们得去找到每一个区域里面，它对于这样稳定币支付的需求。那比如说一些比较稳定发展的国家。像日本，像可能像香港，那像市场，像台湾市场这些地区的用户，他们其实就对稳定币理财本身是比较感兴趣的。那他们本身也没有太多的支付跨境的这个需求，但他们对稳定币持有稳定币这件事情，他们是有很强大的需求的。那这一块就是我们理财产品里面会需要去覆盖的。对，所以一个比较总结一下，就是基本上。我们会在各个区域里面去看到各个区域的痛点，包含去给他们做 U 卡、做扫码支付，或是做跨境转账。那有一些还正在慢慢推行中的，就是去覆盖更多区域，去了解当地用户的这个痛点。
感谢感谢，这个还是要不得不说，就是我作为一个老选手，第一次用 U 卡的时候，那个感受还是很不一样的。确实是它会慢慢的渗透到我们的日常生活当中去。那接下来。咱们下一个问题啊，是问我们全员每一个人的，我们可以从路易斯开始啊。就是我想问一下各位，你们觉得现在看到的这些稳定币支付案例，是真的可以规模化，还是本质上只能存在于特定的国家或者是特定的阶段？咱们从路易开始吧，这样子。
显然这个是可以规模化的。因为从我们的角度，就是像稳定币，它很好的解决了我们跨境支付，包括这种从采购到这个收款各个端，其实它都能支持。包括现在其实有一个概念叫New Bank 嘛，其实一个钱包本身就是一个 bank， 就是你个人的一个 bank 当然对于一个 bank 来说，它收款付款。你的财富管理到你的这个一些其他的一些服务提供，其实本身我觉得这些东西都是通用的，所以我们是非常看好这个场景。然后我们包括我们其实在做的那个嵌入式钱包，也是想赋能稳定币的各个环节，来解决这些，特别是没有接触过 crypto 的人，尽可能让他能够用邮箱或者用手机号就可以来拥有自己的一个钱包，而且不用去管私钥托管这样一些事情。对，所以我觉得从我的角度，这个显然是一个就是可以在全球大部分地区都是可以来开展的一个事情。当然，大家知道，因为一些监管的原因，可能有些区域还没有开放，那这个可能就是更多的是要通过时间的一个积累。我觉得其实稳定币它也像，或者说 crypto 吧，它就像 COVID 一样，它就像新冠一样，它最终还是挡不住的。 谢谢。
谢谢路易斯。那个 Will 你觉得呢？你觉得从你现在看到的这么多的稳定币，你觉得它可以规模化吗？
我觉得其实就跟刚刚 Louis 讲的一样，其实它一定能够规模化，因为刚刚的这个提到这些需求，其实已经不是这1-2年的事情，都发生很久了，而是应该是说稳定币的出现去帮忙解决这些痛点，所以其实稳定币未来的这个只是会有越来越多人知道，然后开始去使用。所以稳定币在我们刚提到的，尤其是几个区域里面，像是中南美洲，像是非洲，还有中东国家这几个区域，包含它有这个汇率的风险，甚至有一些区域它可能有当地货币对美元额外去课税这样子的风险，会对当地的用户直接持有美元会有更大的这个动机跟激励。所以对于这件事情，其实整个稳定币的扩大一定会有它的规模化。那现在会有另外一个我们遇到的这个挑战，一个点就是需要去教育更多的 Web2的用户，让他们了解到这件事情。比如说我们刚刚提到很多的海外的人，海外的劳动的这个工作者，他们要把钱打回到他们原本家乡，其实可以去用到这个跨境转账，是用这个稳定币，但这个前提就是他们是了解 Web3的。这件事情的本质上其实就是影响到底他们对于这个产业理不理解。所以其实这个也是我们这1年来比较努力的地方，包含很多人对 DeFi 钱包觉得助记词很麻烦，我们得去给他搞一个现在用社交登录，比较越来越接近像刚刚 Louis 提到的，越来越接近他在原本的银行的这个使用体验，变成了一个 New Bank， 就真的是一个新的银行，或是我们叫它做一个 Onchain Bank， 就是一个链上银行的这个体验，才有机会去让越来越多 Web2的人去解决这些痛点。
是的，那Simon您是不是也觉得将来可以规模化？
对，其实完全同意啊，就是前面路易斯和 Will 也谈了很多，我就补充几点吧我觉得我们现在不仅仅是那个星星之火了，我觉得已经成燎原之势了我补充几点，就是以前稳定币作为是个规避监管、规避银行的一种方案，现在我们看到了大量的银行、卡组织，他们也下场了。比如说去年Visa、Mastercard， 他们已经把稳定币放入他们清算了Master 也把那个稳定币开通给一些商家作为一个结算的通道。然后我们看见越来越多的银行，像花旗和 Swift 已经在做稳定币的一些测试了。然后欧洲呢，基于那个 MiCA 法案之后呢，已经有9家银行在产生这个比特币，在 generate 这块。然后我们看见其他的国家也在跟进，日本新加坡的海外银行都有涉足这块。这个说明什么问题呢？就是稳定币不再是币圈的内部转账的工具了，它已经进入了结算层了，已经变成一个结算资产的一部分了，就是说明它已完全具有扩展化了，大规模应用。还有第二点呢，我们也看见越来越多的公司，大公司像科技企业、互联网企业，他们把稳定币作为他们结算工具比如说前面我说的那个马斯克的 Starlink 还有很多的什么像游戏公司，像索尼的 PlayStation 你可以用稳定币来作为它的服务费，还有像 SaaS 软件的，像 Salesforce、SAP， 他们也可以有个选项，你用稳定币来支付服务费。所以当这些放在一起的时候，你就知道这不是一个简单的个例了。然后从我们自己 Interlace 的数据来看2025年我们处理的稳定币的交易量实现了3位数的增长我们覆盖的国家从原来几十个，现在到了180个。所以所有的数据都说明，稳定币一定就像早年的那个互联网一样从尝鲜的阶段到了一个扩展到一个主流一个大规模应用的阶段。
感谢 Simon， 那请 Jessica 也来给我们总结一下，你觉得稳定币的规模化会怎么样？
我提供另外一个维度吧，就是稳定币是不是这个周期的新发明？不是，上个周期算法稳定币搞垮了交易所，对吧？
对的。
为什么稳定币这个周期这么火？有这么多人在投？为什么这一轮融到钱的是 UCard， 是 New Bank？ 是因为 VC 没有项目投了吗？我觉得核心的点还是说， 当大家意识到这件事情的 infrastructure 建好了，有人建 wallet， 有人做 U-card， 有人做 neobank 的过程中，就像当年在国内互联网时代的百团大战，就像在硅谷当年所有的大厂都在做large language model 一样，一定是一轮所有赛道都在铺钱，然后会把大鱼吃小鱼 consolidation 的阶段。现在每周都会有合规稳定币上线，为什么？因为 Stablecoin as a service 是一个生意 ，Wallet as a service 是一个生意 ，Card issuance as a service 是一个生意 ，Service provider 肯定赚了钱了 ，Technology provider 赚了钱了 ，Law firm 赚了钱了 ，Consultancy 赚了钱了，谁能最后胜出？是真实应用场景能够胜出。我们作为一个4年半提供 Stablecoin financing 的公司，也看到了生态中很多的变化。并且我们也意识到说，其实很少有公司积累了足够的经验，知道说 Stablecoin 的 application 的 layer 长什么样子。对，所以我就觉得接下来是一个非常 interesting 的 period， 我们应该 observe 一下，对吧 ，Will？
谢谢 Jessica 精彩发言，我们也非常期待那个将来稳定币一定会有一个非常亮眼的一个成绩和规模化给到我们大家。那接下来有一个问题要问到 Will 和 Simon。问一下2位啊，这个问题是什么呢？就是围绕 everyday finance 这个方向，在哪些场景下稳定币比传统金融更好用？就是这个，我觉得这个2位肯定一定有非常多的案例可以给我们大家借鉴。谢谢，请回答一下。
那我先来啊。毋庸置疑，任何涉及的跨境这块，我觉得稳定币就有天然的优势啊。个人汇款这块它这费用就降低了很多，时效也提升了很多。包括从个人到一些小微企业的跨境采购，也是优势非常明显。另外一块呢，就是对一些高通胀的一些地区，这也成为一种人们就是抵抗通胀率的一个避风港这几块我觉得是比较明显的。另外，从我们自己的数据，我们也发现，在一些 B2B 高频的地方也是使用比特币不是稳定币频率比较高的我们自己看就有3种场景像一种是外包服务类的这和gig economy 有关系。第2类呢，就是广告投放和流量购买，海外的广告投放、流量购买，还有的企业的预付款，或者是供应链的尾端，这些也是使用频率比较高的。因为很简单，大家都比如说在预付金这块，如果你通过稳定币，大家马上可以收到款，马上可以交付，马上可以发货，就马上可以进入下一轮了不用再等所以这为什么现在在很多企业的在一些签合同，比如说在定金的上面都写USDC、USDT优先这就是这个原因
好的，感谢Simon。那请 Will 来分享一下你的观点。
我再简单补充一个点，就是其实还有一个链上的这个稳定币一个特别的优势。其实我不知道大家有没有去用过那个 Web2的这种转账，这个也是我自己真的最近做了几次非常必要的转账之后，我才感受到那个不安全感。基本上你是看不到那个转账过程，就像刚刚 Jessica 说的，它中间有很多去做结算跟验资的这个过程，但对用户来说你是感受不到的，你也不知道你钱现在到底到了哪一个节点。但对于链上来说，你永远都可以去知道你的钱现在到底在哪一个位置，到了哪一个钱包，在哪一个这个检查的这个渠道上。我觉得这件事情是刚刚在提到传统金融跟链上稳定币一个最大的不一样的地方。这个也是一个我感觉，就刚刚除了说到速度，然后省钱之外，还有一个其实蛮大的点就是透明。我觉得透明这件事情也是会让整个稳定币的这个使用越来越广泛的一个点。那还有另外一个点，其实刚刚也有提到一些政府管制嘛。其实政府管制，在可能几年前对于整个推广来说是一个比较难推进的，但接下来包含像日本开始把他们自己也引进了自己区域的像 JPYC， 欧洲有欧洲自己的当地的稳定货币，其实他们就变成大家都能打通的一个新的一个生态系。对，我觉得这个都会是对于整个稳定币市场接下来非常正向的一个发展。
感谢。接下来，朋友们，我们要到今天的最后一个问题了，要交给 Jessica 和 Louis。咱们的今天最后一个问题是，在新兴市场中， 对用户来说，更重要的是监管清不清楚，还是系统靠不靠谱？哪一个你觉得更重要？
这个显然是第二个重要。就其实对于大部分的用户来说，他其实并不关注监管，但只是说监管它可能在一定程度上提供一定的背书，或者说能够用这种就是政府或者说这种强力的手段，把一些这个作恶的一些行为能够排除掉。但实际上本身市场是有这个出清的能力的。其实通过市场的选择，也是能比较好的形成优胜劣汰，让一些比较好的一些 service provider 更可靠的一些服务能够沉淀下来。所以其实从整个所有技术的发展历史上来看，任何一个新技术都是先有了 adoption 后有监管。监管它很多时候是在某种程度上，监管它做得好，它能够加速这个行业健康的发展所以我觉得本质上来讲，当然还是第二个东西更重要。所以其实包括我们 BitsLab 为什么会在稳定币这个赛道上也非常关注，其实也看到了，就是要提供一个稳定可靠的一个系统。其实我们是想解决一些痛点，一个就是关于反欺诈，还有这个领域，其实如果用户丢了钱，其实他也可能就不敢用了，对吧？第二个就是说，我们也希望，特别是大量的 Web2 的用户，能够让他无感的接入到这个 Stablecoin 里面。我们所以做嵌入式钱包的这样一个解决方案，也是为了解决这样一个问题。所以其实也是为了更稳定、更可靠，不用去管私钥，尽可能的来促进这个 adoption 嘛。谢谢。
谢谢路易斯。路易斯选择的是第二点，他觉得更重要的是系统。那想听听 Jessica 的意见，你看你更选择哪一个方面？
我倾向于觉得这是两个层面的事情。因为就开一句玩笑吧，就是依赖于你在哪个法系下讨论，对吧？有的法系是说法不只要没有明令禁止就可为，对吧？那我怀疑有几个层面的事情，因为我们曾经Huma 曾经写过一个 paper 叫做 PayFi Stack。对吧 ？PayFi Stack 有好几层，那有 financing layer， 对吧？可能我们从上面开始讲就底下是 infrastructure layer， 对吧？然后是 compliance layer， 然后是 financing layer， 然后 technology layer。每一个 layer 大家承担的角色是不同的，然后在不同的阶段，它互相 intervene 的方式是不同的。所以我猜测，如果要整个生态成长起来，每一个 layer 都要 play 它的 role。然后我觉得这些 layer 都同样重要，特别是在可能是强监管的国家，而相对来讲，可能在一些新兴市场，大家痛点更重的国家里面，那可能就是我们要 balance 这些 layer 之间的一个关系。对，欢迎大家去 Huma 网站上看那个很 dry 的 paper， 对吧？但我们曾经很认真的想过说，你需要7层，对吧？这件事情才能完成。对，谢谢主持人的问题。
感谢 Jessica， 感谢。那现在我们今天的最后一个环节啊，咱们这个论坛，我想请咱们的嘉宾啊，在咱们论坛的这个最后，每个人用一句话来总结一下。你可以总结一下展望一下稳定币的发展，也可以总结一下稳定币在咱们新兴市场中的真实应用。希望大家能够就是畅所欲言。那咱们从 Jessica 开始。
我觉得2026年是非常精彩的一年，因为我们会看到上半年的迅速增长和下半年的 consolidation。谁是赢家到最后，我们都很期待，因为我们作为一个 payment financing 的1号位，我们会为所有生态内的有真实应用场景的稳定币的发行方和 distributor 成为他们的合作伙伴。谢谢。
期待稳定币的星辰大海。有请 Simon。
有人说稳定币是权宜之计。是在特殊的地区、特殊场合产生的一个过渡产品，我不这么认为，我认为稳定币假以时日一定会成为主流支付领域中不可或缺的一环。我对2026年非常期待。
对今年的一个展望跟期待是，针对像刚刚聊到这个开发中国家。会希望整个稳定币的这个教育能够更快速的在这几个区域里面发展，像是中南美洲跟非洲，还有几个强主权的国家，像欧洲啊、日本啊，这些正准备在今年，像欧洲今年有 MiCA， 然后日本正在搞 JPYC， 这几个强主权国家的整个稳定币生态系能够发展的更快一些，然后推进的整个法规更清晰一些。我觉得这是2块对今年整个稳定发展的一个展望吧。
感谢，有请 Louis。
如果用总结一句话的话，我觉得就是过去10年其实是 Bitcoin 的 story。未来10年其实是 Stablecoin 的这个 story。我稍微想展开说一下这个点，是因为其本质上还是 Bitcoin。因为如果大家看过比特币的白皮书，它的这个 white paper 上面的这个名字就 Bitcoin， 一个点对点的现金系统。其实比特币最想做的就是这个支付系统，只是说过去因为这个各种原因吧，比特币成了一种 stock value 的一个存在，成了一个这种另类资产的一个配置，但是实际上，它还是想解决就是一个点对点的现金支付系统，只是未来可能要靠 Stablecoin 来解决了。好，谢谢。
感谢各位的深度分享，真的是收获很多。今天咱们这场中文论坛，从真实场景到企业选择，从链上适配到日常落地，从安全挑战到规模化判断，我们大家系统的梳理了稳定币在新兴市场的价值逻辑、实践边界与未来方向。咱们这场对话的核心，也就是要感谢咱们的主办方，感谢 Stablecoin， 感谢 Yuki， 感谢我们各位嘉宾，感谢在座的每一位各位，期待与在座的每一个各位同仁，我们大家一起共研新程，合规前行。谢谢大家。好，感谢。好，那大家来，我们一起合影。好，感谢。
好呀，这场分享非常的精彩，对吧？然后从支付的各个角度跟我们分享了很多非常真实的案例。然后我们进入到第4个 panel， 也是非常重磅的一个 panel， 关于收益 ，the yield source and risk boundaries in DeFi and CDeFi. To close our formal sessions, we turn to yield. This panel unpacks where returns really come from, and where risks are structural, and where the boundaries should be drawn. Let's welcome our host, Abby.
Hi, welcome everyone. Where's our panelists? Please come forward and take a seat. Are we missing him? Okay, now we're good. Welcome everyone. Thank you for joining, and I know this is the last of the panel, but I think our panelists here deserve a little attention. Stablecoins are often described as the low-risk foundation of crypto, but over the past years, we've seen that the yield on stablecoins can come from very different places and sources, and they often bear different risks. Some, leads to disastrous results that we have seen over the past few years. Today, instead of focusing on the headline APYs, we want to unpack 2 core questions. First, what are the sustainable sources of...
It's okay, we can try. It's okay. It's okay, we'll pay attention.
Okay. Okay, first we're going to talk about what are the sustainable sources of yield across CFI and DeFi. And secondly, how do we think about risk boundaries? Who bears the risk, and when risk shifts, and when it becomes systematic. And to discuss how we build the sustainable future, we're fortunate to have the 4 leaders joining us today, sharing their perspective from across the stack. So how about we start with each of our guests introducing themselves, talk about yourself a little bit, your project a little bit, and how stablecoin enters your product or protocol.
Certainly. Hello, my name is Mark Richardson. I'm the project lead at Bancor. Bancor is one of the older projects. We're actually slightly older than Ethereum. I think we were the second application built on top of Ethereum after Gnosis, I think. But for those who aren't aware, we invented something called the AMM, which has become something of a pervasive technology across blockchain. It was originally developed for deployment on the Bitcoin colored coin and Mastercoin stack, which never came to fruition. And so after the Bitcoin developer community rejected those proposals, the project then moved to Ethereum. The stablecoin economy, I think, has been a part of the AMM paradigm since the beginning, originally just with things like USDT, but then after that, things like USDC and DAI in particular. And these things continue to be, I think, the preferred numeraire for a lot of cryptocurrencies. And so, yeah, it's a part of the decentralized exchange infrastructure since the beginning, and I think will continue to be.
Yeah, hello. Here is Tim from Spark. I think everyone here is very familiar with the MakerDAO and also Sky. So Sky and MakerDAO should be like a central bank for decentralized the world, and the Spark is like a commercial bank for Sky and the MakerDAO. For example, you can regard Spark as a commercial bank for this system. So we help the Sky and other central bank in DeFi system to distribute the stablecoins, like for USDS. And also you can regard also Spark as Onchain money market fund. So we allocate our stablecoins to other DeFi projects like Morpho and like RV. So you can like regard us like a liquidity provider for every project or every protocols in DeFi and also CeFi in the future. And tomorrow we will have some important announcements in consensus main stage.
Ni hao, wo zhuo samu. I'm still practicing my Mandarin a little bit. Hopefully that didn't sound too bad. But I'm a community spokesperson for the Tron DAO. Been there for about 4 years now. We're an organization dedicated to growing Web3 technologies, specifically the Tron network. And in the past couple of years, we've seen a surmountable amount of growth. Very excited to take part in this panel, and thank you to the organizers for allowing us to come and speak. We're very excited to discuss a little bit more about, obviously, DeFi, yield, the risks associated to it. In general, within the Tron network itself, we have about 4 million daily active users, 12 million daily active transactions. We've settled $25 trillion in volume on our network since its inception. So we're very excited to be here, and I'm excited to take part in this panel as well.
Hello, everyone. My name is Gary. I'm a long-term investor in Web 2 to Web 3. My fund in Web 2 is Tsinghua and CICADA Capital. My fund in Web 3 is Eureka. And now we are doing the on-chain asset management, means put many liquid asset on-chain. And that's just pretty DeFi things. And before, actually, we use a CeFi to invest crypto, and this is definitely a wrong way. So we turn to DeFi, and we tokenize all of this liquid asset on-chain, which includes QuantFi, LoanFi, and supply chain Fi. And QuantFi actually is a hedge fund as a background underlying asset. It's a yield-bearing asset rebased. And LoanFi is based on different kind of collateral loans and based on the lending protocols. And supply chain Fi is based on the real trade. It's a supply chain and settlement. It's about real trading. So this is pretty new, and we call this the second growth curve of the crypto. It's no longer the meme version, no longer the narrative version. We will put the real yield asset behind it. And for me, actually, I've got experience for more than 17 years investment, so we're gonna to put all this together on chain. Thank you.
Excellent introductions. And we've actually designed this icebreaker problem before we actually dive into the questions. It's not the core focus of our panel today, but just thought it would be fun to discuss. Like, we hear the term CityFi everywhere, like last year and this year, but actually the concept of it is often controversial. Sometimes people say it's like a DeFi with KYC. Sometimes they say it's centralized custody with on-chain transparency. But in your eyes, what exactly is CityFi? Like, what's the one feature when you look at this product and make you say, yes, this is CityFi?
So I think to say that something is CDFI is a little bit oxymoronic in the sense that I consider the centralization and decentralization to be
polar opposites of each other. And so to say that something is a hybrid between the two, I think is just acknowledging that maybe decentralization is a bit of a spectrum. But I think what people mean when they refer to CDFI is that they would categorize certain financial products as being DeFi-like, meaning that they use blockchains or smart contracts or self-executing code, and that is sort of something that traditionally you would associate exclusively with DeFi, whereas in CeFi it would be something that has a administrative or bureaucratic process that fundamentally moves it. And so to say that something is CDFI, it can either mean that there are elements of that bureaucratic process that now oversee the smart contract infrastructure, or that that those elements of like tokenization and blockchain are now being absorbed into those kind of administrative processes. But I think that, you know, the pure definitions of these things are still useful. For me, DeFi will always be something that has no element of human intervention possible inside of it, meaning that there are conditions on the smart contract, and that could include KYC, right? One of the things that people speak about is that, well, DeFi with KYC isn't really DeFi anymore. I reject that, because you can very easily have some, you know, additional infrastructure built into the smart contract that fully encompasses the element of KYC. And that can, you know, I think that's important to recognize, because things like, you know, anti-money laundering and anti-terrorism financing policies should maybe be considered a part of the DeFi stack. And if we can come up with ways to do that that don't require human intervention, then I still consider that decentralized. But I also understand that when those things get injected into traditional DeFi products, people feel like that maybe that is, government or regulator intervention in something that used to be absent, right, from those processes. But to my mind, if there is a smart contract that self-executes, it's DeFi, KYC or not. And if there is a smart contract that requires someone to approve a process manually, then that's centralized, whether or not there's a blockchain involved or not.
Yeah, I think I can say something on top of our business model. I think whether DeFi or CeFi, we should consider all this belongs to the blockchain. For example, previously we only have like a DeFi kind of business model, like people do collaterals like lendings on-chain. But for now, like when I talk with a lot of institutions in Hong Kong and also in Europe, like because a lot of institutions, they don't have the ability to do some on-chain lending. So also they were limited by their risk management. This is why like they prefer like deposit their collateral like a Bitcoin or Ethereum into one of the custodian. This is why like just 1 month ago we launched our like first CDFI business model, which means that all the institutions or wealth, they can deposit their collaterals into the custodian like Anchorage, and then we distribute our loan to them. So I think in the future, not like so like separated from DeFi or CeFi, we just see what is the demand of our customers and from the users, and then we just develop our product in the future.
Yeah, I think I like the earlier response about looking at CDFI as kind of it is kind of an oxymoron, but it's good to look at it as a spectrum as well. I like that analogy because, in my opinion, I do see CDFI as a way in which gaining access to permissionless markets, but you still need to do proper KYC. It really comes down to the actual asset that you're dealing with as well. For example, there are various assets that are integrated with either the Tron ecosystem or even broader ecosystems like Ethereum, where they have specific assets that are permissionlessly available on more permissionless venues. But in order to actually lend your capital to those specific assets in other manners, you have to go through KYC, AML to ensure that they're meeting regulatory standards in those whatever jurisdictional regions you are. So yeah, I look at it as a spectrum as well in that case, where CeFi is on one side, DeFi is on the other. Obviously, if something is fully permissionless, meaning there is no centralized intermediary that has to be involved in any way, shape, or form, that's full on DeFi. And then, of course, CeFi is when there is more of that type of involvement. But where the two really intersect, I really think it comes to the point of allocating your capital to those said products effectively, going through the proper KYC, and then the product itself, once you actually have attainable access to it after doing proper KYC and minting it, then you can go do DeFi looping, go do other DeFi venues or wherever else it might be available. available. So I think that's really where the CDFI component kind of comes into play there.
Yeah, CFI and DeFi actually have got a lot of difference. But first of all, I have to have got a opposite opinion about KYC. And for KYC, actually, because nowadays we have got opinion on KYC, actually it's supervised and given by big banking system. So actually, it's not justice. It's not actually real KYC. Well, I wrote an article 3 years ago. It's about ZK KYC. Once there a protocol can protect your privacy, and then there will be a new kind of DKYC in on-chain. This is very necessary because if there's no KYC, there will be no credit. If there's too many KYCs, there will be overprotection. So there will be a middle point. Will happen maybe 2 years later, but not now. So KYC actually is not the way that for me to divide what is the difference between CFI and DeFi. This is the first thing I want to mention. The second one is how to divide, how to differentiate what is the difference between CFI and DeFi. Three things. First of all, is the asset, backup asset. Whether you make the strategy asset on-chain. The second one is the settlement, which is the most important. I think the biggest difference between CDFI and real DeFi is the settlement thing. CDFI actually maybe have some of the DeFi asset, but actually make all of this settlement off-chain. So this is about CDFI, and CFI actually make all of these transactions, settlement, accountings off-chain. So they need a lot. They need a lot of traditional finance things. And if you are CDFI, you need many oracles because the settlement work is half off-chain, half on-chain. So this is pretty complicated. We have done a lot of work. I'm the founder of CICADA. We have more than 20 people to do the settlement clearance for both of the CFI part and the CDFI part. It's very complicated because we want to put all of this thing eventually wrap up into DeFi smart contract. So this is about a settlement and clearance. The third thing actually is the final thing is the liquidity, transaction, and exchange. And this one actually could be easier because we're quite familiar in the last 4 cycles. But the problem is if there's only liquidity, only exchange on-chain, but there's no real settlement and clearance and no real asset behind it, that will be scammer. That will be Ponzi game. So DeFi actually, for itself, on the top layer, it's quite mature because of the last 4 generations. But now why we are doing the RWA things, because this is so difficult for us to do the oracle, the middle layer about the settlement and clearance, and the bottom layer about the asset and strategies. So we're doing this several years, and I believe that there will be big perspective. Yeah.
Gary, I just want a question. So like, let's say that would you consider permissions or permissionless permissions to still be DeFi? So like one of the very early like KYC approximations was that if you're setting up a liquidity pool, there's an option to provide a whitelist of addresses that are allowed to interact with it, either as a liquidity provider or as just a spot trader. And so if the smart contract infrastructure itself has no ambition, it has no overview or restrictions on what you can include in that whitelist, then would you say that it's centralized for a user to set up their own liquidity pool and say, I only allow my friends to trade with me on this liquidity pool? So I realize it's maybe not know your customer, but at least know your trading partner, right? Would you consider that centralized or decentralized?
For this generation, for this stage, I think it will be centralized. But there were several things: AI agent, Oracle, and ZK technology. For these 3 things, we'll develop more for like 1 and 2 years. I think many of these things will be decentralized. Oh, one more thing is a vote strategy and a vote mechanism. So the 4 things plus together, and I think many of the things will be decentralized.
So something needs to be unrestricted in your mind for it to be decentralized? Or can you have restrictions like self-nominated, self-imposed restrictions that would still be classified as
What kind of restrictions you mean? You mean regulations or?
Anything. could be like, it could be a regulator telling you what the restrictions are, but it could just be the user saying, no, these are my own restrictions, and I just made them up.
Yeah, I understand. To be honest, for this stage, will be a lot of restrictions, and these restriction rules actually are created by us. And it's not very decentralized, to be honest. But we're supposed to push all of this to the vote mechanism and let everyone to come in and join the vote mechanism.
Okay.
Yeah.
Okay, thank you guys. I love the diversity of the opinions, and that actually gave us a great baseline. Now let's talk about where the yield actually comes from and how users assess it. Let's start by looking at the diversity of yield. Sam with USDT 2.0 and the new STRX Vault, you're offering like a dual yield structure that is very attractive for growth-focused users. And Tim's Spark V2 anchors to the sky savings rate, providing a stable, somewhat predictable option, often backed by RWAs. So we used to think of DeFi users as like all degens, right, as a single group. But the market has matured as we think. But how do you see your respective projects fitting into a user's portfolio today? Do you see a future where users hold both like savings account and growth account? And how do you serve this widening spectrum of users?
You said Sam, correct? Okay, yeah, just want to make sure. Yeah, and the question was mainly on the DeFi users coming into the specific assets, and okay, yeah. So I look at it in multiple ways. No, I don't think it's just open to degen audiences. I definitely think as vaults start to become more matured, either on DeFi lending platforms like Morpho, Aave, etc., and being actually built on those said infrastructure platforms, I genuinely think a lot more institutional players will come into the space. Retail, of course, still has that access to it. It goes into the previous question that we had about CDFI and DeFi versus CeFi. Can users gain access to permissioned products that you usually have in the US? For example, in the United States, as a retail user, if I wanted to gain or buy a mortgage note and gain access to that, it's very, very difficult to do that as a retail investor. Maybe if the issuer of that asset files a proper S1 classification under securities guidelines, they could do so to accredited investors. But it's very, very difficult to provide that to retail investors. And just because you tokenize something and bring it on chain doesn't mean you completely forget about the classifications and rules of governance that are used to govern those said assets. So I think as the market matures and more infrastructure and technology is being built and the actual assets that are being tokenized are the actual assets, and we're ensuring that everything is being properly structured, whether it be through a special purpose vehicle that's actually issuing receipt tokens that are offering the yield on those assets. I think that's where we can start to see retail investors gaining adequate access to those specific products. And that's where I really think the wave of more institutions will come in. And again, you can walk and chew gum at the same time. I think it would be awesome to have more of that. But I think the biggest barrier right now has to be the user experience, has to be the regulatory arbitrage that needs to be created properly, and of course, making sure everything is done compliantly. There's a reason why in the States so many products are difficult to gain access to. And I think as, again, the market matures, legislation catches up to innovation, we'll be able to see more institutions gaining access to more DeFi-friendly products, and then also vice versa. And I think that's the biggest unlock that I'm very excited to see.
I agree. Yeah, James, do you want to add on that from the Spark's point of view?
Yeah, I think when we're talking about the yield, we should know that the yield is from the revenue of your protocol. So I can just talk about what is the revenue maybe for Tron, also for Spark. Because for Spark, I think 80% of revenue comes from our Spark liquidity layer. So we distribute our liquidity to like Sparkland and also Morpho. This is the first place we earn the yield or earn the revenue compared with others. And also like in the past, I think 6 months, the Spark revenue is much higher than Ethereum layer 1 itself. So you can check on the DeFi Llama. So the second is we also provide the liquidity as a service for stablecoins. For example, like PayPal. Everyone here may know PayPal issued stablecoins in the past few years. So we are the most important distribution channel for PayPal USD, PYUSD. So we are the market maker for PYUSD in the Curve and also Uniswap. So we set up trading pairs between the PYUSD with USDS. So everyone, they want to get the liquidity of the PYUSD, they can borrow from Sparkland and then transfer the PYUSD to USDS and then to the USDC. So which means that the PYUSD, even there are a new stablecoins in DeFi, they can get the as much as liquidity for USDC if they use the Spark infrastructure. So and also for the CDFI yield from we provide our institution loan just a few weeks ago, and also it's a very, very good yield in the bear market. And also for Spark and Sky ourselves, we not only get yield in the bull market, but also in the bear market. For example, in the bull market, the borrowing rate in DeFi space should be much higher. So we distribute more of our liquidity to the DeFi space. But in the bear market, we distribute our liquidity maybe to T-bills or and others. So this is why you can see in bear market, even for now, you can see our savings vault, the APY is around 4%, but in other lending protocol like RV or MoFo, the savings rate is much lower compared with us. So this is when we're thinking about the yield, we must know where is the revenue from for this protocol.
Thanks. Excellent input. So I think the next question is towards Mark and Gary. So Mark, Carbon DeFi is introducing professional-grade features like recurring orders and adjustable fees, giving users basically the power of an automated trading firm. And Gary, CICADA is bringing professional-grade assets, RWAs on-chain, ensuring yield comes from verifiable sources. And it seems both of you are raising the standard, the bar of what asset management means in DeFi, and moving away from simple deposit and hope model to a professional era. Can you tell me about how do you protocols help educate or empower users to manage their wealth with more sophistication, whether that's through better infrastructure or better assets selection?
Yeah, so there's a couple of things worth unpacking there. In your question, you said the deposit and hope mentality. And that actually resonates with me a lot. So the paradigm that I think emerged from DeFi summer was that there was a lot of excitement, a lot of new users entering the market who didn't really understand anything that they were doing. And what that created was an incentive for protocol designers and cryptocurrency businesses to provide really no explanation as to what the financial service is that the user is interacting with or the financial instrument that they're buying. And especially in decentralized exchanges, this idea of staking tokens or providing liquidity for fees, I think has been a really hard to shake lie, right, in the industry. I'm still of the opinion, and I've provided, I think, fairly robust arguments against the idea of fees and exchanges at all. And that this idea of a fee being correlated to the financial performance of an AMM or any decentralized exchange is just fiction. But it does serve a marketing purpose, because the message of telling a user, put your tokens here and earn fees, is very simple. Whereas if you're telling a user, buy this short gamma option, that's much more confusing, and they don't really understand what that financial service is or that financial instrument is. So I think that doing away with the old vernacular, right, and not using words like stake or deposit, but really making sure that you provide actual self-exposition, right, in the UI that says, look, these are the decisions that you're making, and that this will be the financial outcome if the thing that you're hoping happens. And not using things like APY. I think that APY or even APR is one of the most misused financial indicators anywhere in DeFi. You can go to any exchange anywhere and find, this token pair is yielding 120-something APY, even if that pool has actually not made a profit ever in its life. So this kind of deliberate miscommunication, I consider marketing hubris. And I think the more we gravitate away from the marketing terminology that was invented to sell DeFi in 2020, the more honest we become with the financial, services that are potentially being offered for the first time on blockchains, the more that we're going to attract a demographic that actually understands what those things are and how to use them. And I would much rather that kind of individual, right, the person who is of a certain intellectual level, right, who has the IQ to understand what these services are and these instruments are, and knows exactly what they want to do when they use them, and have the parameterization of the protocol expressed naturally in the way that they've been taught to interact with financial markets. I think that is much more compelling, that the educated user is the demographic that you're going for, rather than trying to bring in, uneducated people and try and teach them about finance. I think that that's the naive, dangerous approach that more DeFi protocols should probably be moving away from.
Thank you, Mark. For asset management, the education is very difficult. I mean, I spent at least 6 years to transfer myself from a traditional investor to a Web3 investor, because many of the ways is opposite. You have to think about liquidity first, but not value first. And in traditional finance, it's value first, and then finally, 5 years later, maybe 10 years later, think about liquidity and exchange. So the first of all, I think the very difficult thing is education, market education. It's very hard to merge the two markets, Web3 DeFi native players and also the traditional rational investor. So this is one of the biggest things. Once upon a time, I went to Vietnam and I visited a very professional investor over there. They say that there are a lot of university students who want to play crypto. Why is that? Because crypto is neither the stock market nor the gambling. It's between something in the middle. So it's a new market, and you have to educate both of the customs and both of the education over there. So, and from the other side, people usually have got a imagination or even illusions, including myself. Once you want to invest some of the assets, they have got illusions. They want a very high return, very low risk, image that's 30% of APY. For example, like today, today's lunch, I've got a lunch together with some professional investors, and they say that, oh, I've got a strategy over there. It's a 100% APY. I say, that's impossible, and it's not sustainable. And you can go to the Wall Street, and the best asset is a 20% with the Sharpe ratio 3.5. This is one of the best class. If you say that it's 100%, and I will say that it's 100% is a scammer and a Ponzi game. So the thing is that how to put people back from illusion, how to give them rational thinking, and at the same time let them feel what is the real DeFi with the high liquidity. And then sometimes I talk to a traditional investor, very professional, say that Web3 is different than high liquidity. He said that, oh, pretty good. I will do the T+0 thing every day. Why should you do that? It will bring squeeze. So high liquidity doesn't mean that you can withdraw, redeem every day, but it's a high liquidity, much better than traditional investment. So you have to get rid of this kind of illusion out of from their imagination. So there's a lot of different things that you have to do in the community, your LP, your investor, and it's very hard to persuade them and say that, oh, this is a new kind of generation of the asset, and still at the same time it's not scammer things. So this is what we're doing now, and I think it's a new asset class, and I think it should take time, several years, for many people to accept that this is a new asset class.
I want to follow up on something you said there, which was, people will come to you with their new DeFi product, be like, look, it's got 120% APY.
Yeah.
And you're like, no, it doesn't. That's impossible. But what's interesting is that the blockchain industry, the DeFi industry, spent so much time and resources trying to convince people that that was normal, right? You remember 2019, 2020, right? And so the embedded, right, the deeply entrenched blockchain community that we have now will not settle for a 20% APY. And I'm not saying that we should try and strive for 100% APY because that's never going to happen. But it means that there's this entire generation of crypto users that are now so disenfranchised, so disappointed with what reality actually is, that we now need to sort of turn our attention to either the people that always rejected those kinds of returns, and you see that they're coming to the table more and more now, or the people that were 16 or 18 years old in 2020 are now approaching crypto and sort of seeing it for the first time. But the people, like that well of people that was here and using Ethereum and BSC and things back in 2020, 2021, I'd say that well is now poisoned forever, right? You're never going to be able to re-reach those people because they were there when 1,000% APY on SushiSwap during the vampire attack was kind of low.
Totally. A bunch of people come out from the casino and they ruin the market.
Yeah.
Okay, it's very interesting that you guys both mentioned like educating the users, and it's kind of somewhat sarcastic about the users' mentality going back and forth. But I guess when it comes to like marketing for a broader market or the whole industry, you just have to do certain things at certain times. So it's just the process. Now let's talk about the capital efficiency and infrastructure. This question Spark is positioning itself as a liquidity layer, routing liquidity towards most needed across DeFi and CeFi. And Mark, Carbon focus on execution efficiency to protect users from MEV and prevent their strategies from being reversed by market noise. And for the industry to scale, yield isn't just about the APY number. It's about how efficiently capital is used. Can you talk a little bit about how does your infrastructure ensure that users get the most out of their capital?
Yeah, sure. So just as I disagree with the word fees that's used almost everywhere in DeFi, I also think that capital efficiency should have heavy air quotes around it, right? Capital efficiency in general has had a very rigid definition for many decades as being essentially the amount of money that you spend on R&D versus the amount of productivity or profit that brings. It was first bastardized by Uniswap, I think, when they started introducing their version of amplified liquidity, which was called concentrated liquidity, back in 2021. And the way that they use it is to basically compare how much volume a DEX can support versus the standard constant product model. And that is largely how it was adopted across the industry after that. But this is a very bad definition, especially because for liquidity providers, being more capital efficient using those heavy air quotes is actually meaning that you're putting more of your inventory at risk for a lower volatility profile compared to someone who is using constant product. So that efficiency claim is really from the perspective of people taking the market, not the people making it. So as a liquidity provider, you're generally trying to be as uncapital efficient as possible because it means that you can wait for lower prices to buy assets from the market, even in a passive way, and wait for higher prices to sell them back to the market. So if you are providing, let's say, liquidity to a concentrated liquidity market, the capital efficiency there is really at your expense, and the reasoning for that, the justification for that, is that being able to process larger amounts of volume means that you can charge a smaller spread, and if you cross that spread many, many times, then your profitability, should go up. But this is only true if the market remains sideways. As soon as you get a market dump, then the person who provided liquidity to a much less capital efficient system has lost a lot less money, a lot less value than the person who provided liquidity to a more capital efficient one. So this way of categorizing DeFi products as being capital efficient is, again, more marketing hubris, right? It's not something that really exists in financial markets and never has. It's really been about the cost of running a business. And we shouldn't conflate those two things, right? Investing in financial instruments is neither efficient nor inefficient, right? The result from someone's perspective, you can make the claim that it's more efficient for them if someone does something. But remember, it's adversarial. Most of this is still zero sum. So what is efficient from someone's perspective might be very inefficient from another person's perspective. But what I will say is that if you look at, for example, the original trading algorithm, so like the Bancor V1 constant product stuff in any number of dimensions, if you were of the mind that you're happy to provide a certain amount of capital to be taken from you through a certain price interval, then sure, the requirement that you have to provide more capital than the capital that you are even offering to the market through that range is kind of inefficient. And so the advent of amplified or concentrated liquidity, where you can actually just specify this exact price range you want to trade within, rather than having to contribute money to a pool and support all prices from 0 to infinity, I'd say is a step up. But let's just not, conflate the idea of capital efficiency in that context with profitability or APY or anything else. The more efficient you are, usually the more at risk you are. It's leverage like anything else.
Maybe I think I can talk about the capital efficiency and also yield from Spark and also from the US Treasury two paths. For Spark or for yield, I think when talking about the yield, we should talk about the risk-adjusted yield, not only the yield. For example, if you have only like a $100, maybe you don't care, you put your money into like a high yield, maybe 100% of the yield. But if you have like a 10 million or even 1 billion, you should concern about the risk-adjusted yield. So if you are an investor or you are a capital allocator, you should know like which kind of vote or which kind of protocol should you allocate your liquidity. For Spark and the MakerDAO Sky, like we only support like Bitcoin and wrapped Bitcoin and also LST Ethereum as a collateral in our blue chip Spark land. This is why like we call us like a low risk DeFi. So anyone here, like you can just check the ticker of the low risk DeFi. I think in the future it is a word of the low risk DeFi, not the high risk DeFi. And also we come back to the capital efficiency. I think the total blockchain is like capital efficiency tool for the US Treasury in the next few years, because like previously when the US government want to sell their US Treasuries, they must come to Hong Kong or come to like a man of China or come to anywhere to talk with the government. But I think for now they just use the Tron as a distribution channel to distribute the USDT or USDC like a treasury-backed stablecoins, use the blockchain, and then no need to care about the government. Directly distribute the US Treasury or stablecoins to anyone here, individual. So I think this is the capital efficiency. This is I think what is blockchain for now. So I think in the future, if you want to invest something like in blockchain, you can just see which kind of the protocols or which kind of the chain can be the distribution channel for the US Treasuries, maybe in the next 4 years. Yeah.
Yeah, I mean, I think to add on to that too, it's also really important to ensure that when dealing with USDT on Tron and things of that matter, we're still abiding by proper regulations across the various governments to ensure that there's no money laundering that occurs, drug trafficking, or any sort of financing terrorism that occurs on chain as well. And the Tron network has done a big job of working with global law enforcement to reducing as much illicit activity that may occur on chain. But to my fellow panelists' point, I really like to look at Tron again as an infrastructure for payments. I know we've talked a lot about capital efficiency and yield and things of that matter, but in terms of the reliability of the Tron network itself and its infrastructure, we've had no downtime since our inception. We've settled $25 trillion in payment flow, a lot of it being USDT on Tron as well as other types of stablecoins. And these are people across the entire globe, moving money for cross-border payments, moving money for remittances, and also big companies dealing with B2B payments being able to now do import and export. There was a study that was done in sub-Saharan Africa looking at 11 countries and dealing with the type of amount of fees that they had to pay when doing those imports and exports across those 11 neighboring nations. And they found that they had to pay around 10 to 12%, so about 11% in fees on those transactions and on those activities. That amounted to about $10 billion. Now, $10 billion in any market is a lot, but in the global south, especially in Africa, that's magnitudes more powerful of money that can help those economies scale accordingly, that can help them now then gain access to adequate financial services, compliantly speaking, so that they can scale properly. And I think it's really important to take a step back and look at the ethos of why blockchain technology was created. There's different perspectives of it. One perspective I like to look at it is we're providing financial infrastructure and architecture to the rest of the world, as it's not something that should just be given to a select few of people. I think it's genuinely something that should be allowed to and applied to everybody. And I'm proud to say that Tron has been doing a great job of that, and looking forward to seeing more people build more amazing things as well.
Yeah, that's actually my next question. But I wanted to take a look at the expanding this whole ecosystem, because Tron is bridging DeFi to the real economy through payments. And congratulations on your recent regulatory achievements in Abu Dhabi. Right? And Gary, your work with RWA is bridging on-chain DeFi with off-chain real-world value. I mean, we often talk about mass adoption ever since so many years ago. But do you believe like the next wave of growth comes from these bridges to the real world? And like, I know like we have different products and we have different like stances, or but how do we like bridge this next $1 trillion on-chain?
Yeah, I mean that the scalable is actually very important. I mean that, for example, like Coinbase gave me a really, give everyone a good report. And this report actually based on 4 different kind of assets. One is a commodity, one is a T-bill and treasury. The third one is a loan file, which is based on the collateral loan. And the other one is a private credit, which is a private debt, private loans, and private equities. And so actually, the scalable and mass adoption to trillion, I think it's too big a number. We can put an eye on to 100 billion. It's very important. For example, like a Maple. Maple is, what does Maple do? Actually, this is very important. Ondo is doing the asset of a T-bill, which is a AA loan market in the US. Maple is doing the collateral loan and a corporate loan market, and so does Figure, because Maple uses the lending protocol way, Figure uses the mapping way. So they are focusing on single A collateral loan market compared with the traditional loan market. So they are actually very focused on what they are doing. So this is very important, because single A loan market actually is a $100 billion US market. And then if you enlarge that, that can be a trillion market sometimes. Yeah. So this is a very big market for loan market, because everyone knows that the loan market in the US is bigger than the currency market even. So I'll go back to the quantify market. Quantify market actually in crypto is a very niche market. EXIO actually has touched the number of $14 billion US for TVL and AUM. But actually, this is a very big number. So many people ask me about the quantify, whether you can have the quantify very prosperous in 2026. No, you cannot, because quantify is very limited, and quantify in crypto actually is a market lower than $100 billion US. But later on, in 2 years later, for a stock market, no matter SEC or other kind of central platform agree on that 7 hours, and then you can use the tokenized version of stock market and a commodity, then there will be more alpha coming into the market. And so at that time, we will have more quantify. So this strategy niche market will be bigger that way. So this is why loan market and quantify market, and also the PayFi. Actually, to be honest, many of the payments actually in the gray area are not counted inside the Coinbase report. I can see that in Africa, in South America, in Southeast Asia, in South Asia, many of these payments actually definitely is PayFi are not included. So all of these assets actually can be put into actually more positive and more professional in this year or the next. So supply chain fi, payment, PayFi, and currency asset actually will be put into many different asset class. And for this asset class will be definitely bigger than $1 trillion US. And you can read the Coinbase report that already, for now, USDT and many of the stable coins only have got in total is $300 billion US dollar stable coins flow everywhere in the world. But actually, that supply of 47.6 trillion US dollar the transactions means that this is quite a big number. And this number will definitely have got an exponential model in the next few years. So trillion US dollar is okay, but we have to focus on the right way, which I think it's not quantified, but loan market is okay, but supply chain fi and PayFi market.
Can I just jump into recognizing the Abu Dhabi victory we had with Vara, recognizing USDT on Tron? But to go to his point as well, I think it's really important to look at the problems that are currently found in traditional loan origination. It's extremely slow, it can be costly, and it's very, very cumbersome and very paper heavy. If you can find a way to be able to make it faster, make it more efficient, programmable, and less paper heavy, you've now been able to open up a credit market to potentially millions, if not billions, of people across the world, and are now able to originate more credit in economies to actually scale more appropriately. That solution is blockchain technology, or so we say so. And I really think that's the direction that we need to start to continue to move in. That's where RWAs come into it. And then into the PayFi front as well. That's just the concept of, again, moving money from one place to another. To throw some other really big numbers around, the global annual payment flow that occurred in 2025 of all types of payments that happened in the globe was $2 quadrillion. Okay, that's $2,000 trillion. This is the amount of money that went from one place to another and settled across the entire globe. The amount of that happened and was filtered accordingly on crypto or using blockchain rails was about $1 trillion. There's plenty of other assets that were traded, obviously growing that number out. But that should show how big the PayFi industry can be disrupted using blockchain technology. And the amount of tokenized assets that are available are also pretty, I don't want to say negligible, but they're very, very limited compared to where we can go in terms of credit markets, in terms of VC markets, in terms of other types of assets that we can make tokenized in an appropriate manner. So those are just some numbers that I wanted to throw out there because I do think they're worthy of kind of noting.
Do you think that I mean, you said that there's a paper-heavy sort of, burden, right, on traditional rails. How long do you think that burden won't exist in blockchain? Because I'm of two minds about these things. I think that on traditional rails, that burden could be ameliorated by itself. Like, there's nothing special about a blockchain that takes away, the policy that has been, put on top of these products, right? And to assume that Bitcoin has a defensible moat simply because of that, I think is not acknowledging that there could be just a grand deregulation across the world that's like, fine, all of the stuff that we did to make traditional finance difficult, we're just going to undo all that, and now the traditional rails are going to compete with blockchain. Or the reverse, right? That as regulation creeps into blockchain, it could be that it becomes as paper heavy as the alternative. And at some sense, you are really, like, the interesting thing, I think, in DeFi and CeFi right now is that it reminds me a lot of, like, the Windows versus Mac OS X operating systems, right? Where it's not like one is implicitly or intrinsically better than the other, but they do have different features and, do things different ways. But whatever happens in one operating system, you could easily put into the other, into the other one. I'm just wondering, like, if the efficiency that you're speaking about with respect to the lack of, like, regulatory intervention being the thing that keeps it moving, do you foresee that that's going to continue into the future, or are you getting the same feeling that I am, that as regulation creeps in, it slows everything down, and eventually these things are going to be neck and neck?
I don't think regulatory intervention is going to effectively, deter growth. Maybe there will be a pain point within it, but I think it's necessary to ensure that there's no counterterrorism that's occurring, or you want counterterrorism to go against the terrorism, right? You want to make sure that there's no drug trafficking or any sort of illicit activity that occurs on chain. Just because something's decentralized doesn't mean that people can take advantage of that system and take advantage of other people. I think that's extremely important to note. But to your point, I do think as regulation starts to peer in, as it already has, once we get over those hurdles and those pain points, and in some eyes they might not even be viewed as pain points, I still think the user experience, the seamlessness of actually gaining access to that infrastructure to move money from one place to another will still be as good as it was beforehand. So especially from a payments point of view, it's really just the user experience that needs to continue to be improved. And I think regulators are going to help bring that to more mass adoption, especially when you're looking at like a full stablecoin sandwich model. Some people, they may never be able to grasp the concept of using stablecoins. They may always want to do fiat pay in and fiat pay out, but the actual institutions that are taking time to do the KYC, do the KYB, go through all the regulatory matters, are using blockchain systems internally to be able to move funds on a faster basis and pre-fund accounts from one quarter to another, improving the entire experience. So hopefully that answers your question.
Okay, thanks for sharing that. So in the questions before, we've gone deep into your products, your mechanism, how you, and I think the audience now have a very clear understanding of what you guys do. And now we want to zoom out. We've designed this next section around the most heated topics currently being debated in the industry. But unfortunately, because we're running a bit late, we'll have to unfortunately cut the question into just one question. But for the next one question, the floor is open. Let's make this like a free-flowing conversation style. Feel free to jump in, respond to each other's inputs, and let's get a real discussion going. So the question is like, is there a fundamental trade-off between yield, liquidity, and safety in DeFi and CeFi or CDeFi? And which dimensions do users or sometimes even protocols often misjudge or ignore?
Yeah, okay, so just to repeat that, is there a fundamental trade-off between yield, liquidity, and safety in DeFi and CDeFi? Which dimension do users or even protocols often misjudge? And I think it's a really nuanced question. I don't think that there is a fundamental trade-off, right? That would suggest that, you know, in order to attain some sort of goal, you need to give up something to get there. I think that that is demonstrably not true. However, I would say that these things are correlated. For protocols that are, or DeFi products that are advertising impossible yields, right, as we've been discussing here on stage on several occasions, oftentimes those yields are deliberately and maliciously manipulated and are designed to trick users into using their protocol. And I do think that in that sense, you're kind of trading off safety for yield, but in that case, the yield isn't even real, right? I think that this is just normal sort of scam tactics. I will say that, you know, with respect to what I was saying before about capital efficiency being just sort of a masked term for leverage, there is, you know, you can make the case that leverage does attract a higher yield. Not on average, mind you. Remember, there was a Nobel Prize awarded for, I think, Miller and Modigliani, who proved that leverage systems are no more efficient than unleveraged systems, at least when it comes to structuring corporate finance. But on occasion, you will win big if you're levered up. It just means that the chances of you losing big when you're levered up are also sufficient to displace the advantage that you think that you get. But if you have an extremely high confidence level, right? For example, we see that the Bitcoin price has been tumbling down dramatically quickly and then made a quick bounce. At this point in time, if you have an edge, right, and you know beyond any shred of a doubt what's happening tomorrow, then yes, you can leverage your position and make a bigger profit than what you would have been able to without trading on margin, for example. But if you're even a little bit uncertain, right, or if there's any chance at all that the market might move against you, then yes, you are trading safety for the possibility of a higher yield. And as long as you remember this example, everything in DeFi and CeFi eventually reduces to those axioms, right? Do you know the future? Yes or no? Or how confident are you about what's going to happen in the future? If you're very, very confident, then you can trade safety, meaning the confidence that you have in yourself and your predictions, for a higher return. But if your confidence is low, then you probably shouldn't lever up, and you can trade a smaller yield for a higher level of protection. It's similar to, if you're trading on a roulette table and you just bet on every single number, right? Then your returns are going to be low because you lose almost every single bet except one. Whereas if you bet on one number, you're going to lose a lot more frequently, but at the possibility of a higher return. That is it. That is all of finance, right? How confident are you? How certain is the outcome? And how much are you willing to bet that you're not going to be wrong? It's true of every protocol, every financial instrument you'll ever buy. I think that's the best advice I can give you.
Okay, I think the yield for Spark and Sky is like off-chain yield and also on-chain yield. And also for CDFI is also CFI yield and also DeFi yield from borrowing and also from the funding rate in the future. And also, but I think the best yield assets for in crypto is like the assets without the yield. It's like a Bitcoin, and also in the future, I think it's on-chain gold. Yeah.
Yeah, I'll keep it short as well. I think all of them can coexist in terms of those variables. Assuming that you can only do a couple of them with some of them being traded off. I think that could be seen as an excuse to just say that you're going to have 1,000% yield, when in reality, if you just take more time, do more honest marketing, and actually build the proper products that are needed to be built, you can achieve all of those forms. And with the Tron network, again, we try to stay reliable. We want to ensure that security is there, and I think that's also a very important thing when navigating on-chain finance, making sure that not just the product is actually proper, but you're not subject to any sort of security risks.
So from my view, give you the conclusion. For long term, actually, long term view, it will be very, very quickly. I mean, that will happen in less than 2 years. But from a short view, for this year, I think it's a pretty struggle, and we'll have many regulation things to face, and so there will be many exchanges. So we will face very deep changes of the concept of the regulation thing of all of this, and then we will mix this together and try to change the CFI view to the DeFi view. So this is it.
Okay, does anyone want to add on to that, or because this is the last question?
Oh, okay. Maybe touch up a little bit. I have a question for Dr. Mark Richardson, really diving into the economists that you mentioned, the Nobel Prize that they won. I'm curious, what type of approach do you take? Do you take more of the I'm always right, the quantitative confidence approach, or do you take more of the levered safety approach? And then how do you apply that to the broader market? Because from how you mentioned it, what if there are news that are being circulated that are pushing people to think a certain way, to be overly confident? And do we see a lot of that in crypto and Web3? I remember, I think around 2020, there were a lot of algorithmic traders that believe this certain thing through their algorithms or their quantitative trading, and they were wrong, and it brought the oil price down to negative numbers. So I'm curious how you look at that as a whole.
Yeah, it's a fair question. I mean, I wouldn't categorize myself as a trader at all, really, or even an investor. I'm a worker. I do the smart contract, audits and protocol design elements of things. That's not to say I don't use my own protocols, but I think that when I do it, I do it in the same way that someone might bet on a sports team that they really like, or something like that. And so, if there's a soccer game or a football game or a tennis match, and I'm like, I really want this person to win, right? That's it's my want that does it, and I'm not doing it with huge amounts of personal value. But what I will say is that generally, it's even in sports events, the people that take your bet and the people who bet against you often know the outcome of the match before you do. Right? And really, that's the question that you should be asking yourself in financial markets as well. Like, if Winsmute has taken a position and you're going to bet against them, you have to ask, like, how confident am I that Winsmute isn't going to precipitate the outcome that they're looking to take? Right? One of the conversations I had with someone recently, especially about crypto markets, but now apparently in gold and silver as well, is that the derivatives markets are kind of now dictating what happens to the primary markets or the secondary markets, in the sense that if I'm the bookie and I can see the futures markets, and I'm taking all of these bets, and I have enough liquidity on my balance sheet, enough inventory on my balance sheet to move the underlying market. And I am, let's say, I'm going to be on the hook for $2 billion in payouts if the price moves up, but only $1 million in payouts when the price comes down, and I have enough inventory to make the price do whatever I want, right? Then there's no way that I'm going to place a bet with that bookie, right? Because, or if I am, even if I don't think that that outcome makes sense, I'm going to do the thing that they should do because it's going to cause them to pay out the least amount, if that makes sense. Yeah. And if I don't have insight into what that market looks like, I'm not participating in that market.
Okay, I guess that's the end of our panel. We've basically touched on everything, and let's take a photo together, shall we?
Yeah, take a photo.
Right.
Yes.
All right. Thank you. Yeah, great job, man. It was a great panel.
Okay, thank you to all the speakers and participants, and thank you for being a part of a Stablecoin Odyssey. And this is the end of this event, and thank you. And you can enjoy your networking time.
Could I escape?